This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions over Israel's war with Hamas continue to grow.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. That's where you will find us. Tom Keene off today. Holy cow. How did that happen? Jess Metten, you're in the big chair today.
I am. It's going to be a lot of fun. I'm excited. But we've done this a bunch of times.
We've done this a bunch of times.
So it'll be a good Friday.
So we've got Jess for the next 3 hours here. Coming up, we're going to check in with Stephanie Lang, CIO at Hammerberg, discusses Trump trade implications and how far the animal spirits can carry this market. Vania Stavrakeva, professor at London Business School, on the Eurozone's big PMI miss today. I'm looking at the euro right here. I mean, Tom Keene, he's booking his Paris trips, his Milan trips, his Rome trips. I mean, I'm looking at the euro, almost a parity, 1.04, so we'll break that down. Nadia Lavelle, senior U.S. equity strategist, Global Wealth Management, UBS, get her market thoughts as well. Then it's 7:48.
Get ready.
Newspapers, Lisa Mateo. How cool is that?
Must listen.
It is just the highlight of the morning. Speaking of Lisa Mateo, let's go to Lisa right now. Get a Bloomberg Business Flash. We'll kick things off.
You got it. We got futures lower as investors trying to shrug off those initial concerns over NVIDIA's revenue outlook. NVIDIA shares still down about 0.5%. NASDAQ futures down 0.2%, 51 points. Dow futures, little change, down 34 points. S&P futures down 0.1% or 9 points. We have the 2-year yield at 4.32%, down 2 basis points. The yield on the 10-year 4.39%, and that's down 3 basis points. To currencies, a dollar on course for an 8th straight weekly gain. Right now, the Bloomberg Dollar Spot Index up about 0.2%. We have the Japanese yen stronger, the euro weaker. The euro dropped to its weakest level since 2022. Right now, it's at 104.17 against the dollar. The British pound weaker. Bitcoin right now, it's closer to that $100,000 level at 98,992. Shares of Gap, the owner of Old Navy, Athleta, they're rising on up 15% this morning, and this is after it raised its full-year sales outlook ahead of the shopping season. It also says it's attracting those wealthier shoppers that are looking for value, similar to what Walmart had just said recently. And then shares of Intuit, the maker of TurboTax, down about 5%. Disappointed investors. They were looking for a boost from the company's new AI products, just didn't get it. And Adani Group companies, they advanced after a $27 billion rout yesterday. That followed that U.S. indictment against Gautam Adani over allegations of bribery. Now, shares of Adani Group up 2% in India. At this same time yesterday, they were down about 22%. That is your Bloomberg Business Flash. Over to you.
Lisa, are you a Gap shopper?
I am a Gap shopper because I do, yes.
Okay.
I like the Athleta because it's not as pricey as Lulu.
Jess, are you a Lulu or are you Athleta? What do you do?
You know, I just look
I
for
can't find
whatever
anybody who
works.
says they're a Lulu buyer.
Not
it's
necessarily,
expensive.
because you can find other options that are vastly cheaper that look the same.
Like a
so
Gap
I'm
too.
good.
Yeah.
Exactly. So I opt for what Lisa does as well.
All right, very good. But good days.
I don't need like $100 yoga pants. And
No?
I don't really do yoga. I just wear them to like
Because
please
they're
you.
cool.
Exactly. So I'm not really doing it for the right reasons.
All right, very good. Lisa Mateo, thank you so much. We appreciate it. Jess Metten, she's sitting in for Tom Keene, who's taking the day off. We appreciate that. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. So you can subscribe there today as well. Let's take a look at these markets here. Again, a little bit of red on the screen here.
Also, the end of the week, so the S&P 500's up over 1% right now, so on pace for
the week.
For the week, so on
Okay.
pace for 2 weeks of gains in the past 3.
Do you cover the markets for Bloomberg News? Is that your gig?
I do. My gig is
that's
right. I do a little something for the markets desk.
Exactly. I mean, you write all the time.
We
you guys
do.
are publishing all the time.
No, we do. I also got to co-host, actually moderated an event for Bloomberg Intelligence with the CMT Association the other day. So we got to talk a lot about technicals, what people are watching going into 2025. So good stuff.
All right, Stephanie Lang joins us. She's a principal. She's a CIO at Hammerberg, joining us here to talk about these markets. Stephanie, what does a Trump trade mean for you, if anything?
Well, clearly the market likes the Trump trade. And so what we're seeing is a re-rating of growth going forward. There's an expectation that we might have lower taxes less regulation, and, potentially more M&A. So I think it's a tailwind for the market. We already were in a good spot, though. I mean, we already had good growth in the economy. Earnings were strong, and really even moving stronger in 2025. So I think this is just an additional tailwind when we were already in a good spot.
Walk us through sort of the dynamics when you think of the differences when Trump was elected in 2016 versus now. If you look at forward valuations on a 12-month basis for the S&P 500, at that point, going into Inauguration Day in 2017, it was around 17. Right now, if you look at the S&P 500, around 22. And even if you strip out the Mag 7, it's still around 20. So that's still above the 10-year average of 18. If you're thinking about positioning, obviously the Federal Reserve at the time was on a different trajectory when it came to rates than it is now, and versus what the economy is doing. How do you position in that type of environment, and how will this be a bit different, especially with the bull market run over the last 2 years? The S&P 500 is already up roughly 70%.
Yeah, I think you really hit the big risk on the head, which is there's a lot of good news already priced into this market. So as you mentioned, the market's up big, over 20% this year, 30% in the last year. A lot of that good news is already priced in. And so you saw a recent pop with, the Trump trade, if you will. And I think what we have to be a little bit nervous is if we don't hit these lofty expectations, whether it's a bump as far as the economic data, the Fed surprises us and maybe doesn't cut like expected. And so you have to be wary of that. And that's why we think there could be quite a bit of volatility going forward. But I will have to say that, while valuations are high, they can stay high for a very long time.
That's
so
a good point.
Really...
And I'm glad you brought that up, because so can sentiment. As you know, it can stay stretched for a while. We even saw that there were concerns about earlier this year, back in February, we saw sentiment seeming a bit stretched. But when you look around this, I mean, you just mentioned how much the S&P 500 is up year to date. I mean, it's up around 25%. So if it closed the year today, I mean, that would be its best annual gain this century. So I'm curious your thoughts on what's the playbook when you think about those year-end gains, because typically post-election day in those election years, you normally wouldn't see quite as strong of a rally in the S&P 500. How much was that front-loaded? Because Deutsche Bank was talking about typically from election day to the end of December, you usually see about an average 4% gain on a median basis for the S&P 500. Do we see something similar to that, or is it a little bit trickier when you already have those gains front-loaded?
Yeah, I think, it's been a tremendous year already. We're going into a good seasonal period. So I think that is a positive. But there is a lot of uncertainty coming up in terms of what's going to happen with policies. That we have some really important data points coming up for the Fed. We've seen the trajectory of what the Fed is going to do get cut pretty significantly. The next Fed meeting, they'll give expectations in terms of what they're going to do going forward. So I think, it's hard to know exactly, of course, what's going to happen the next month. But I think I would expect a lot of volatility. But there is a lot of momentum in this market. So I would expect, we could see a strong year end as well.
Stephanie, we're just kind of finishing up this earnings season here. What did you take away from their earnings results and I guess more importantly, some of the guidance from some of these companies?
Yeah, I mean, it was a good third quarter earnings. It was on a lower bar, so the beats were a little bit easier. I think what's important, though, going forward is that we've come a long way in terms of earnings. 2024, we're going to end up about 10%. But the good news is going into 2025, we have an acceleration of earnings of around 15%. And also important, while in 2023, and really even this year, it's been all about the Mag 7, you are seeing a deceleration in earnings growth for the Mag 7, and you're seeing the rest of the market participate, which we think is really important for the sustainability of this rally. So, we're optimistic to see that acceleration. We do think there's a possibility 2025 earnings could come down. But overall, I think the market's going to be more driven by fundamentals going forward. How are the earnings growth, going forward? And we're going to need that to grow into these valuations and really drive stock prices moving forward.
All right, Stephanie, thank you so much. We appreciate that. Stephanie Lang, Principal and CIO of Hamrick Berg. So, Jess, I'm looking at Stephanie. She's based in Atlanta, and I just knew, looking at her bio, that she works at some office building that's on a Peachtree Street. And sure enough, 3060 Peachtree Road.
Peachtree.
It's not Peachtree Avenue, Peachtree Lane, Peachtree Road. It can be northeast, northwest, southwest, south. It's every single road in the city of Atlanta, like the fifth largest city in the country. Every single road is Peachtree. It just flummoxes me to no end.
Have you been down there?
I've stayed in Atlanta at a hotel on Peachtree.
I've asked every single mayor, governor of Georgia the last 30 years, what is going on with you people down there?
So also, how confusing is it to
you
navigate
can't,
around?
Every cab.
It's like, hey, I'm on Peachtree, let's meet up.
Every time you get in a cab, it's a 20-minute conversation. The guy's like, is it Peachtree North, Peachtree East, Peachtree? Anyway, that's just kind of my Atlanta ring. With our news in New York City, John Tucker.
All right, guys, new choice by Donald Trump to lead the Justice Department. President-elect nominating former Florida Attorney General Pam Bondi to run DOJ. Let's get this story this morning from Bloomberg's Doug Krisner.
The selection of Bondi comes after Trump's first pick, Matt Gaetz, withdrew from consideration. The former Florida congressman faced scrutiny over allegations of sexual misconduct. Now, Gaetz denied them, but he lacks support among Senate Republicans to be confirmed. In Bondi, Trump is elevating another longtime ally with Florida roots. In the first Trump administration, Bondi worked out of the White House, assisting in communications related to Trump's first impeachment trial. And as Florida AG, Bondi earned national attention for her efforts to overturn the Affordable Care Act. In New York, I'm Doug Krisner, Bloomberg Radio.
President-elect Trump still hasn't made a decision on Treasury Secretary, but according to the Wall Street Journal, he's considering naming former Fed Governor Kevin Warsh to lead Treasury Department, then putting him in charge of the Fed when Jay Powell's term ends. At the same time, Trump could pick Key Square Group founder Scott Bessent to lead the National Economic Council and then take over Treasury if Warsh becomes the Fed chair. The Federal Aviation Administration says it expects the upcoming holiday weekend to be the biggest Thanksgiving travel period ever, period. A TSA administrator, David Pekoski, says this year saw the first 3 million passenger day with a new record expected this Thanksgiving weekend.
Sunday following Thanksgiving, which is always our busiest day. It's the busiest day of the year typically in passenger travel. That will be a day that will have more than 3 million passengers, we project.
That's TSA Administrator David Pekoski. Texas would allow Bible-infused lessons in elementary schools under changes that were sent for a final vote today. It could test the boundaries between religion and public education in the U.S. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Paul and hi, Jess.
Hi, JT. Always a pleasure.
All right, who's traveling? Who's getting on a plane?
Not for the holidays, I'm not.
I'm going nowhere.
Yeah. I love traveling, but I'm staying here.
I mean, who's going on a plane this week?
I will, for the first time in a very long time, go to the Giants game.
Really?
Oh, okay.
You know why? Because the person who tried to sell them actually couldn't give them away.
So you're going to see Tommy Cutlets or whatever his name is?
Yes,
All right.
sir.
All right,
Should be
very good. I
interesting.
mean, literally, the Giants can't give their tickets away. So that's kind of where John Tucker going.
John Tucker
So
gets
we'll all be watching to see if we can see John Tucker in MetLife Field for the Giants game. S&P 500 futures -8. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. We've got futures falling. Geopolitical tensions continue. Russia said yesterday it launched a new kind of missile into Ukraine. We have NASDAQ futures down 0.1%, 39 points. Dow futures, little change, down 15 points. S&P futures down 0.1%, 7 points. The two-year yield, 4.32%, down 2 basis points. The yield on the 10-year 4.39%. That's down 3 basis points. To currencies, the Bloomberg Dollar Spot Index up 0.3%. The Japanese yen stronger, euro, British pound weaker, and we have Bitcoin at 98,752. To commodities, gold rising for a fifth straight session. Spot gold up more than 1% at $2,699 an ounce. And we have Brent crude down 0.6%, $73 a barrel. WTI crude $69 a barrel. Companies making news. Apple, it said it's going to be developing a more conversational version of the Siri digital assistant. It's going to use more advanced language models. Those large language models allow for that back and forth dialogue. I don't know about that. And Ken Griffin said he would be open to selling a piece of Citadel. It was during an interview with Bloomberg. He said he would consider a partner like Sequoia Capital and ruled out an IPO. And the head of Stellantis' Ram pickup brand said that the automaker is open to revising a planned push into lower-cost countries, including Mexico, if President Donald Trump imposes those new tariffs on the industry. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I'm still getting over the Keene's Steakhouse. I mean, that is my #1 go-to steakhouse.
I've always wanted to go, and I haven't had a chance to yet.
It's phenomenal. It's just old school.
Any relation to
no relation
the man
to
himself?
I
was just gonna throw it out there.
But I mean, when my friends come in from around the world and say, I want to go to a New York steakhouse, I go to Keene's.
All right.
That's just kind of the go-to.
What do you have to get? What do you, a T-bone? What do you
what's
New York strip medium. The
keeping it
street beans
simple.
are
There
to
you
die
go.
for.
Okay.
And they've got a great wine list, and the staff is just fantastic. Eating at the bar is probably one of the great New York experiences one can have. I think eating at the bar. Let's talk about the economics over in Europe. Some weaker PMIs came out today. I think surprising some people as to, kind of going back into a contraction across there. Dr. Vania Stavrakeva, professor of economics at the London Business School, joins us. Professor, talk to us about the economic activity we're seeing across Europe these days. I mean, the central banks are easing, but still some challenges out there. What are you seeing?
So thank you so much for having me. Unfortunately, we don't have many good news in Europe, both the Eurozone and the UK. And we have seen significant divergence also reflected in the stock market performance, as you're, of course, aware. So since the Trump elections, the Euro Stoxx 50 has decreased substantially while the S&P, et cetera, has increased. What's interesting is if you look at historical data, and not go back that much in history, but post the global financial crisis, you find a very high correlation between aggregate stock market price growth returns across the US and the Eurozone, for example. So in the data, the correlation is around 86%. During we see sometimes divergence. So nowadays, we definitely have divergence since the election. And another period during which we had significant divergence was during the post-2016 Trump elections. So if you look particularly during the period from June 2016 until June 2019, you find that the correlation between the US and the Eurozone stock market drops to 70%, which is a drop of 16%. Now, what does this mean? Well, actually, I have recent work which allows me to decompose the movements of idiosyncratic stock prices, but also aggregate stock market indices into easy to interpret components. So what do we do in a paper titled Elephants in Equity Markets? So we take, let's say, individual stock price growth rate or the aggregate stock market, and we decompose that growth rate into the subcomponents of the growth rate of holdings. So what are those subcomponents? Well, the stock price could be moving because the portfolio managers are rebalancing their weights, the weights that they place on this stock or stock market in their portfolio. It could be moving because of what we call wealth effect. So let's say the net of fee returns of the fund are good. So it's like an amplification effect. They could be moving because of final inflows or outflows into the funds, and also exchange rate valuation effects, which capture, for example, that US dollar investors hold global stocks, for example, Euro stocks.
Also, we wanted to point out, because Paul was talking about this earlier, looking at the euro in particular falling to its lowest level since 2022. Walk us through kind of the dynamics when you're thinking about Germany and France, because that's obviously the Eurozone's two largest economies. And we were thinking about those increasing bets that the ECB is going to have to boost the economy's region by potentially a half-point cut. Whereas over here, if you're thinking about the Federal Reserve, that's getting dialed back to potentially maybe even a pause potentially in December. Walk us through the dynamics when you're thinking about what's happening in the Eurozone versus what's happening over here in the US. And then, of course, very different dynamics if you're thinking about the Bank of Japan.
Yeah, so in general, using this decomposition, you can trace it to portfolio weight changes. So it's the same nowadays. So why are the investors rebalancing their portfolios differently with respect to Eurozone countries than the US, which is kind of aligns with your question, why now we see that we're pricing differently, let's say French and German stocks relative to the US stocks. So what are the news potentially driving the divergence at the moment? So what we see happening is definitely there is a lot of concern, of course, around tariffs and differential regulation across industries in the US and Europe. Granted that the Eurozone is a much more open economy, tariffs are going to hurt much more the Eurozone than the US. So that's one of the factors. Another factor, which I believe is going to be first order importance, maybe not so much priced in at the moment, but it's going to be priced in soon enough and definitely in the medium run, is the different fiscal sustainability path across the Eurozone and the US. So we already seeing in the UK, we saw the latest budget, which implied significant increase in terms of taxes for essentially capital, essentially firms. So this is definitely going to slow down growth. I do believe that the Eurozone is not different in the UK. Both the UK and the Eurozone have unsustainable welfare states given the current tax system. What do I mean by this? We are taxing labor as much as possible, meaning probably we have reached the maximum amount of taxation we can impose on middle income and higher income earners. So we need to start taxing capital. We are seeing that in the form of labor. This is not so easy to do. If you tax capital, also you decrease real-term growth. What do you see in the US? It's exactly the opposite, right? We got Trump. People anticipate lower taxes on firms, but moreover, the fact that he appointed Elon Musk to a newly formed, essentially agency that is the only goal of which is to decrease the size of the government, we would expect that the goal of the Trump administration is to decrease the amount of taxes you need to essentially get in the future in order to finance the government. This is very different from what's happening in Europe. So this is going to definitely hinder growth in Europe overall. How do we fund the welfare states? What do we tax? Who do we tax? Higher taxes definitely are going to translate with lower growth and, of course, worse performance in the stock markets.
Is there any political appetite, Professor, to lower some of the expenditures across Europe? You talk about the welfare state. Is there any political, expectation that could be reduced over time?
That is a very good question. Unfortunately, we're in an equilibrium where fortunately or unfortunately, when you have big welfare states, you have usually a large fraction of the voting population benefiting from these big welfare states, right? So the statistics shows that in the UK, more than 50% of the population on net receives more benefits than pay in the form of taxes. If you have a big chunk of the population benefiting from the welfare state, it's highly unlikely for them to vote a party in power that is going to promote cutting the welfare state. So I do believe that the only way we can reduce, I'm not saying that's optimal or not, but this is from the perspective of growth and performance of European stock market. The only way to decrease the welfare state in Europe is over time to reach the limit of fiscal sustainability, meaning you have very high level of debt to GDP, you have reached the max level of taxation on labor income, right? You are finding that increasing taxes is actually not increasing revenue. So once we reach that point, essentially any party in power is not going to have a choice and they'll have to do something about essentially the welfare state. But that is very costly. It's going to take time to get there, and it might mean at least a decade or even more of low growth in Europe.
Okay. Professor, thank you so much. We appreciate that. As always, Dr. Vania Stavrakeva. She is a professor of economics at the London Business School. Give us the lowdown there. Again, some weaker than expected PMIs coming out of Europe, showing kind of slipping back in to contraction there. And looking at the euro is weaker against the dollar, down 1.04, almost at parity, which is really something. Looking at the VIX for Tom Keene, it is still below 17. S&P futures down 7, Dow down 3, NASDAQ down 44. Not much movement there on the index level. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, pointing to a lower open. Investors turn to other sectors for better value after this month's rally in U.S. equities. We have NASDAQ futures down 0.1% or 40 points. S&P futures down 0.1%, 6 points. We have Dow futures just ticked up about 5 points. We have the 2-year yield, 4.32%. That's down 2 basis points. The yield on the 10-year, 4.39%. That's down 3 basis points. To currencies, the Bloomberg Dollar Spot Index up 0.4%. We have the Japanese yen stronger, Euro, British pound weaker, and we have Bitcoin up about 0.7% at 98,817. Shares of Reddit, they're down 6%. Here's the reason. Sources say shareholder Advance magazine publishers, well, they plan to borrow against its $1.2 billion Reddit stake. And Couche-Tard, well, it says it's not considering a hostile takeover bid for 7&i Holdings, but it's going to keep its proposal for a $47.3 billion buyout on the table. That's according to a report from Nikkei. And sources say DirecTV calling off its planned acquisition of Dish. Bondholders rejected a debt exchange. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Metton sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So check out youtube.com, search Bloomberg Podcast. Nadia Lavelle joins us, Senior U.S. Equity Strategist, Global Wealth Management at UBS. Nadia, thanks so much for joining us here. I'm looking at the SPX, up about 25% year to date. The equal weighted SPW up only about 16% here. Is that typical? Is that unusual? What does that tell you here?
It's sort of the pattern that we've seen over the last couple of years. And quite frankly, I would say this year it's been better, right? I mean, there was a wider gap between equal weighted and S&P market cap rated last year because there was such tech dominance and, as you know, the coin of the Magnificent Seven term. But this year, we're seeing a bit more broadening out. And while there's still that gap, it has narrowed. And even just recently, just on the heels of President-elect Trump's victory, we've seen some rotation under the hood that's really helping the market performance broaden out, particularly since some of those cyclical areas of the market.
I wanted to point out, especially when it comes to a lot of the targets that are coming out, I know that UBS Global Wealth Management, they're looking at a year-end target of 6,600 for the end of 2025. Just doing kind of percent change calculator here, that'd be about an 11% rise from yesterday's closing level for the S&P 500. And Paul was just mentioning we had about a 25% gain so far year to date this year, and the back-to-back gains over the past 2 years would be the first time actually this century that we would have seen the S&P 500 have back-to-back gains of more than 20% last year, as well as this year. So when you're thinking about kind of in line with history, this is a little bit above that if you're thinking there's going to be 11% increase. But even going back to 2021, I mean, the S&P 500 was up around 27%. In 2020, it was up 16%. In 2019, it was up about 29%. So the last time we would have seen about an 11% increase would have been actually in 2016, the S&P was only up close to 10%. So what do you think are the headwinds into next year that would maybe potentially pump the brakes on some of the rally that we've seen the last couple of years, if that's what y'all are indicating?
Indicating headwind. We actually are indicating that we expect the market to remain strong, but there is a normalization process that's happening, not only in the economy, but also I think in the stock market itself. 11% is quite healthy. As you pointed out, the last few years has been unusual, and some of that has to do with some recovery that's happening post-COVID. We've seen multiple expansion. The valuations, as we know, are elevated, 22 times forward PE. These are levels that we haven't seen since, outside of COVID and also during the dot-com era. And so while we think that valuations can hold, what needs to happen right now is that the earnings growth is going to have to do the heavy lifting. We're seeing the broadening out of earnings, but remains seeing how robust that could be. And then you have a changing of the guard in terms of the government with the red sweep. There is some uncertainty around government policy and the risks that it could pose to markets. But fundamentally, the economy still remains quite strong. We have an economy that's growing above trend, 2.5%, pacing in the current quarter, a consumer that's still strong, and a Fed that's also now reducing interest rates. And all of that should be supportive to the market. But I think we have to temper our expectations versus the last 2 years.
Nadia, what's your target for the S&P 500 year-end 2025, and what's driving that?
Yeah, so the 6,600 is our target for year-end 2025. Now, I think we can all appreciate that there is risk around that target, and there's wider dispersion than usual. What's really driving that is the earnings growth. We're looking for high single digits earnings growth, about 8% earnings growth for next year. But returning to the band around that, the risk band, higher than usual. I mean, our upside scenario, the bull case is calling for 7,000 on the S&P, but our downside scenario, bear case, which includes the threat of tariffs, would be 5,100. So I think we have to prepare for a market that could be a bit more choppier and volatile and sort of ebb and flow with the news around government policy, given the implications for next year. Some of the policies will be pro-growth, but some of them could also be headwinds to the market.
As you know, especially when it comes to technology, AI infrastructure spending has been still quite strong there. But of course, utilities, there's been the tie to data centers that have really taken off and helped that. If you look at the XLU, though, it's actually broken below from a technical basis its long-term uptrend. What do you view when it comes to utilities? Is that an area that you're continuing to add exposure to? Because normally they benefit when the Fed starts cutting rates, but a lot of that was front-loaded and they really started rallying really strongly about 6 months ago.
Yeah, I mean, that's a great point. I mean, utilities, when you think about it, it has that mix, that defensive mix that you talked about, and also the data center build out. I mean, there is an insatiable demand for energy, power demand to build out data center. And if you look within some of the top performers this year, it's not only the NVIDIAs of the world, it's also some utilities that has done well. And so we continue to think that there's opportunities there. Yes, we've seen a little bit of pullback in the last few weeks. As the long end of the curve has moved up, and that's provided some headwinds from an interest rate standpoint. But we would be buyers of any weakness in utilities because we do think that part of the secular growth story in terms of the data center build out and the demand for energy still remains quite solid.
Financials have gotten a lot of love over the last several weeks. Expectations of looser restrictions, maybe some increased capital markets and M&A activity. How do you think about the financials here?
We like financials. Also, we find it as an attractive sector. And this was before even President-elect Trump's victory. We thought that financials was positioned well into 2025. We're getting a steepening of the yield curve. That's a good thing for financial. It'll alleviate some pressures on deposit costs, but also that sort of a reinvestment. Remember, banks, on average, about 60% of their balance sheet is in fixed rate assets. And so that repricing of asset yields is also quite helpful. And then, of course, as you noted, the possibility of regulatory reform and easier regulations. We've heard President-elect Trump say for every one new regulation, 10 should go away. And financials is a heavily regulated sector. And then there's a potential for capital markets. We've heard, during the earnings season, the pipelines are looking strong. And so we think that the tailwinds are in place even outside of potential changes to government policies that are in place to help push financials further in 2025.
Of course, there's a lot of discussion on the uncertainty when it comes to those immigration restrictions that could have implications for the labor market as well as inflation. When it comes to particular corners and industries within the stock market, if you're thinking about small caps, for instance, obviously when you're thinking about not even just rates, but when it comes to cheap labor, also the hospitality industries, leisure, construction, and things like that. When it comes to these plans for potentially mass deportations, how does that end up impacting these types of companies that are relying on that type of cheap labor, and what does it do for them? And especially when it translates to their earnings and their stock prices.
Yeah, I'm glad you raised that point because it's interesting to see small cap has rallied in the wake of the election outcome. Huge outperformance the day after. We are neutral on the space. We do things that the risks are balanced. And you could see small cap continue to catch a little bit in the near term. But when you look into 2025, those are some of our concerns, not only from a cost of labor standpoint, but also just in general on earnings standpoint. We're not seeing that recovery yet in small cap in terms of our earnings. And then, yes, there's a possibility that you could see a pickup in M&A. And I think that some are playing that angle, thinking that small cap companies could be targets for M&A. But you also have to point out not only the immigration part, But the threat of tariff, I mean, we know small cap is quite economically sensitive. And when you look back to the history of the last trade war, small cap actually underperformed for that because it does have implication for economic growth. It also has implication for the capex cycles, which we know that small cap is quite sensitive to. So right now, we think the risk reward is balanced, and we probably should fade a little bit of that rally that we've seen from the Trump bump in small cap.
And especially, Paul, I was just looking at the comp function in the terminal. If you look at RTY for the Russell 2000, after it had that initial boost following the election day, if you look over the past 2 weeks, still down about 1.5%. So giving back all of those gains.
Back the gains. All right. Nadia, thanks so much for joining us. Nadia Lovell, she is the senior U.S. equity strategist over at the Global Wealth Management business at UBS, giving us her thoughts on these markets. Again, futures here kind of mixed on the day as we stand here at 7:40 a.m. Wall Street time with our news in New York City. Here's John Tucker.
All right, guys. President-elect Donald Trump says he's nominating former Florida Attorney General Pam Bondi to run the Justice Department, elevating another longtime ally to carry out his agenda. Bondi has repeated Trump's claims that the department's investigations of his conduct have been laced with politics. Former Congressman Matt Gaetz took his name out of the running for Attorney General, but there is still a push on Capitol Hill to release the House ethics investigation on the Florida congressman. The former congressman, Illinois Democrat Sean Casten, sits on the Ethics Committee.
It matters for the integrity of the law, it matters for the integrity of this House, and it matters for the respect that we expect the American people to give us, that those of us entrusted with this job will uphold the United States as a land where all are treated equally under the law.
A Democratic Congressman, Sean Casten. Besides the misconduct accusations, Gaetz is facing campaign finance questions. Federal filings show the former congressman's main campaign arm spent $1.2 million on e-merchant fees to Stripe, the San Francisco-based fintech. That's about 19% of Gaetz's contributions. Campaigns typically spend just 1% to 4% on payment processing. A warning from U.S. intelligence and national security agencies. It's about a sabotage threat from Russia. Let's get details from Bloomberg's Oliver Crook.
This is part of this sort of broader conversation that we've been having for a long time in Europe and in the United States about the sort of hybrid warfare that Russia has been waging in various different sectors, whether it's sort of in civilian infrastructure or just sort of some sort of psychological dimensions, and of course this question of social media, all of these sorts of things. But this is specifically directed at defense companies, warning basically that there could be active Russian sabotage to operations in the United States and also abroad. And this is also coming as sort of Russian intelligence groups allegedly also try to identify and recruit individuals, sort of insiders of these industrial bases, to try to sort of convert them or get information from them.
Bloomberg's Oliver Crook says President Biden's outgoing administration has warned allies about the risks of stepped-up Russian sabotage if the U.S. and its allies allowed Ukraine to fire Western weapons deep inside Russia. In the meantime, Ukraine's parliament today canceled its plenary session due to the threat of a possible air attack on Kyiv's government district. This according to lawmakers there. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess, I know in your day job, you write about and you cover the markets. You've got a story out just over the last several days. Wall Street analysts are scaling back their forecast for corporate America's earnings growth over the next year, which could slow down the stock market rally.
So that's actually looking at earnings revision momentum on a 12-month basis for earnings per share. So GMA, Gina Martin Adams' team over at Bloomberg Intelligence compiles a lot of this data. So when you look at that, it's actually the markdowns are coming most for the commodity driven type sectors. So energy, materials, a lot of that, especially in the third quarter, because those crude prices were down. And so that affected those industries the most. So you're seeing that happening. So it's not broadly quite yet, but that's something that her team is keeping a close eye on, just because right now, if you're looking at those earnings growth expectations, they still have 2025 EPS a little bit above 270 here. So that's important to keep their eyes on, and not just for 2025, but for 2026 as well for investors, Paul.
All right, keep an eye on earnings. Earnings matter, so we're told. And as a former equity analyst, I like to think that earnings matter. S&P futures right here, we're down 8. The Dow's down 2, and the NASDAQ is down 50. Feels like a sleepy Friday here, a little bit rainy New York City. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got red and green on the screen. This is as we get into the end of the trading week. Right now, NASDAQ futures down 0.2%, 43 points. S&P futures down 0.1%, 6 points. We have Dow futures, though, up about 3. The two-year yield, 4.33%. That's down 2 basis points. The yield on the 10-year, 4.39%, and that's down 3 basis points. We have the Bloomberg Dollar Spot Index up 0.3%. The Japanese yen stronger at 154.43 against the dollar. The euro down about 0.5% at 104.13 against the dollar. We have the British pound weaker. Bitcoin, well, it's nearing that 100,000 mark at just over 98,000. Digital assets, speaking of which, flagged as unregistered securities by the U.S. SEC. Well, they're rallying this morning. This is after Chair Gary Gensler, he announced his plans to step down. So you have XRP, that's a token that's linked to Ripple Labs, up 24%. You have the ADA token linked to Cardano blockchain. That is up about 13%. On the economic calendar for today, we have a read on sentiment from the University of Michigan, and that's taking place after the election, so that'll be interesting. Some companies making news. Apple and Alphabet, they're set to face a formal UK investigation over their dominance of web browsers on cell phones. And shares of Texas Pacific Land up 7%. The company is set to replace Marathon Oil in the S&P 500. That's before the open of trading on Tuesday. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live the video thing on YouTube, so head over to youtube.com and search Bloomberg Podcast. Jess, I don't know. I mean, Bitcoin, Tom's not here, so we can talk about it. 98,700, up another 0.6% today. Right at that 100. Does that mean anything to you?
Well, actually, so the panel that I was moderating the other day for Bloomberg Intelligence, there were a few different technicians there that were looking at the levels. So John Kolovos, he was actually arguing that he potentially could see Bitcoin going as high as 200,000 there. But of course, we've seen different calls like that. Tom Lean, the last couple of years, his call was around 150 back in 2021. But right now, it's striking distance of 100,000 here.
I remember when Tom Lee was a cellular telephone analyst.
That's right, back in the 90s. He had a lot of big calls then.
Cellular telephone technology was just coming to bear, and he was on the cutting edge. And man, we were doing tons and tons of deals for those cellular companies. That's where Tom Lee cut his teeth before he became a perma-bull on the equity markets.
That's right.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages from around the world, brought to you by IBKR. Financial advisors, switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at IBKR.com/RIA. Lisa Mateo, what do you have for us from the newspapers today?
All right, so we've been talking a lot about retail earnings, right? You've heard Walmart, Target, like Rust, like all these different companies. But now with the election behind, so this is interesting from the Washington Post. They say that with the election behind it, consumers are ready to spend because they say normally what happens is that before election day, they're a bit hesitant. So they hold off. But they say now that that's over, it's going to open up. More retailers, more shoppers are ready to do different things, but they're shopping differently. Okay, one thing they're going to do, they're going to look for deals. Okay. They're going to be selective on the splurges, and they're going to hit up discount and off-price realtors. Like Walmart, Gap, they said they're drawing in like those six-figure retailers, consumers.
And that's new, it sounds like.
Yes.
It sounds like I haven't heard them call that out before, and I've heard it from a couple of them.
Correct.
From Walmart.
Yeah, and Target's saying like a lot of their consumers are shifting to like the cheaper brands. So you saw that Ross stores. They reported well too. So that's like the discount retailer.
That's right. Lisa and I were talking about earlier. We don't do the Lululemon. We find other things at Gap.
Well, I do the store brands at the supermarket more than I ever have.
True, I do that too.
But some things I'll go with the brand. Some things that are important.
I'm selective.
I'm like,
But that's what it is. So they're
and
saying
it's materially cheaper.
Yes.
Okay.
Most definitely. So so we're spending, but we're just spending differently.
I tell you, I don't think my spending patterns have changed, but since the election, it just feels like a weight is lifted. You can just move forward, look forward, if nothing else. It seems better just because the whole thing's behind you. Now we can to look forward.
And now you know what to look forward to.
Exactly. What else we got?
Okay, so this one is right up your alley. Paramount executives. It turns out they're getting a nice bonus after the deal with Skydance closes. So this is according to a filing. Yeah, they're promising to pay its heads of government relations, human resources, a $1 million retention bonus that's tied to the merger. But I guess this is the thing, like retention bonuses are common. I mean, when they're doing major changes.
Having worked on Wall Street my whole career, and I've been through a bunch of mergers, when company A is buying company B, what you're really buying are the people. I mean, when you go for an investment, you're buying the people. So you want the people to stay. So one of the ways you get them to stay is you pay them a retention bonus. Hey, here's X amount of dollars to be paid over the next 3 years. If you stay, you'll get this money. That kind of thing. We did not do that when Credit Suisse bought Donaldson, Lufkin, and Genret, and literally the next day after the close, everybody walked out the door. It was a disaster.
Oh, so that's why they do that. Okay, exactly. So now it makes sense.
So they do work. They work. I don't know about for the entertainment business, but this Paramount stock, it's at $9. It's still down 25% year to date. That's a tough story there.
Yeah, and the reason why people are upset is because they just announced plans to cut 2,000 jobs.
Yes.
So at the same time that this comes out.
Yeah.
So ESPN is going into the late night talk show scene. Former Philadelphia Eagles offensive lineman Jason Kelce is going to be the host of it. Okay, so he announced it on Jimmy Kimmel Live. It's going to be called They Call It Late Night with Jason Kelce. Original. There
Very
you go.
Good. Yeah.
So they're going to tape on 5 straight Friday nights starting January 3rd. And that actually falls in line with the NFL's regular season, the playoffs. So you kind of see the tie-in there. But I mean, he's a personality.
Yeah.
I mean, I don't know.
No, it's great. Post-career, he's doing well.
And it's going to tape in front of a live audience in Philadelphia, which is, there you go, Philadelphia Eagles. But they have this Philadelphia-based band, Snack Time. They're going to have the music. So it's a limited run, but he's doing it. He's going to the late night talk show.
I mean, the late night business, that's always been a pretty profitable business for these companies because they get great guests. The ratings are okay, and advertisers kind of like that time period. So I don't know. It's always been pretty good, but I mean, it's just and he's got certainly name recognition.
He does, and he has this. I mean, it's in the first year, but he has a multi-year agreement with ESPN. So,
but this is the brother of the Swift Kelce.
Okay. Correct. Yeah, I knew that was going to come up, but correct.
Okay, I can't keep track, but he's
the brother of Travis Kelce.
Yes.
Okay,
he's the one who's retired. Yes.
All right, very good.
Yes,
from
he's
the
no
Eagles.
longer playing from the Eagles. Yes. Yeah. All right, and this weekend, the big Wicked movie coming out. So this one in the Wall Street Journal say fans are going crazy. Like they're renting out theaters. One woman, she has like 100 guests coming, but they post rules. There's certain rules, and you have to remember movie theater etiquette. Okay, so costumes are a must. Loud chewing is unacceptable. Bathroom breaks are no. You can't leave your seat. And no singing along. And it's a singing movie, I know. But there's other movie theaters that are doing something different. Like they have movie theater parties for Wicked, where you can sing. They give out goodies. And then wait until Christmas, guys, because there are sing-along screenings of Wicked coming out.
Go.
A lot, more than 1,000 theaters are going to be doing this. So then there you're allowed to sing.
So Paul, are you going to be
I do not have my tickets yet for Wicked, but you do, Lisa, right?
I so my daughter has the Wicked, went with her friends, and then my husband and I are doing the Gladiator.
Okay.
And my son are doing the Gladiator.
So this I mean, this Wicked thing, and even Gladiator, but I mean, it got some real serious buzz, doesn't it?
Yes. No, it definitely does. And because it's two different audiences, so they're saying this is what, it's like the Barbenheimer.
That's what I was about to bring up. It's like that again.
Yeah,
you got
so
Denzel in Gladiator, I mean, what a legend.
Yes. And Thanksgiving's traditionally has been a really good time.
Coming up on
holiday weekend.
So instead of traveling, let's go to the movies, guys.
That's good. I mean, I tell you, the movie, the Hollywood business, the movie business, could use a shot of good news and good economics.
And Bloomberg Intelligence, they're saying that the box office is expected to take in $230 million with both of those movies. So that's a pretty. I mean, it's no Barbenheimer, but it's still a good
solid. They'll take
solid numbers that they need.
All right, that's the newspapers with Lisa Mateo. Thank you so much. We appreciate that. Jess, are you going to see either of those movies?
You know what? I feel like I would watch either one.
Yeah.
I might lean more toward Gladiator first, but I would watch Wicked as well.
I mean, I saw in the Times yesterday both got good reviews.
Yeah.
So
great cast for both.
But would you dress in costume? for Wicked.
I mean,
Yes.
I don't have
green.
one. I might
That's
need to.
a
What about a hat? Like maybe I could get kind of like a witch's hat or something. But
All
we'll
right.
see.
Good stuff. Lisa Mateo, thank you for that newspaper stuff there. So, all right, good stuff for the movie theater business. Boy, they could use a shot.
I was just looking at AMC stock. AMC, the ticker symbol, down about 27% here today.
Yeah, exactly. There you go.
So please, maybe we should go, guys. Let's go.
Exactly. All right, we're going to have more coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Israel ratchets up offensives in Lebanon and Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Dana Dioria. She's a co-CIO at InvestNet. Give her thoughts on these markets. Does she have any Trump trades out there? Lydia Bosor, a senior economist at EY Parthenon, on macro waves in the U.S. economy and whether the labor market will cool to the point of concern. Lauren Goodwin, chief market strategist at New York Life. She's going to be in our studio, get her thoughts on these markets. She's got a theme out there, kind of two Americas out there. We'll see what she means about that coming up. Right now, let's kick everything off as we do at the top of the hour. Elisa Mateo for the Bloomberg Business Flash.
You got it. We got futures red and green on the screen. We've got investors that are trying to shrug off initial concerns over NVIDIA's revenue outlook. We have NVIDIA shares down 0.5%. We have NASDAQ futures down 0.1%, 27 points. S&P futures down about 2. Dow futures up about 40. We head to the 2-year yield, 4.33%. That's down 2 basis points. The yield on the 10-year, 4.39%, and that's down 3 basis points. To currencies, the dollar on course for an 8th straight weekly gain. Right now, the Bloomberg Dollar Spot Index up about 0.3%. The euro dropped to its weakest level since 2022. We have the euro down 0.6% at 104.10 against the dollar. We have Bitcoin at 98,678, moving closer toward that 100,000 level. To earnings, Gap, shares of Gap, the owner of Old Navy Athleta, up 15%, raised its full year sales outlook. That's ahead of the key shopping season. It says it's attracting those wealthier shoppers. They're just looking to save a few bucks. And speaking of value, shares of discount retailer Ross Stores up 7% after it lifted its annual projections for earnings per share. And then shares of Intuit, the maker of TurboTax, down 3%. Disappointed investors that were looking for that boost from the company's new AI products. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Search youtube.com and go search Bloomberg Podcast. That's where you'll find us. Bloomberg Surveillance today. It's brought to you by Cohn Resnick, Advisory, Assurance, Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive and resilient. Talk to Cohn Resnick's advisors. Let's check in with Dana Dioria, co-CIO of InvestNet. Dana, thanks so much for joining us here. We woke up, I guess, a little more than 2 weeks ago on that Wednesday after Election Day, and a lot had changed. We have a new president coming in. We have what is now clearly a Republican Congress, both houses of Congress. Did that change the way you looked at this market? You looked at investment opportunities at all?
Oh, sure. I mean, I think this election has been one of the most, I'll call it, you can invest toward expectations and actually make out, because the candidates are so very polarized on their positions. And so, but I think the kind of the main takeaway and the way you frame the question is, when you woke up that day, I think the big thing investors have to bear in mind is that, look, if you did pick right in this election, you probably, I'm sure you certainly made money on certain areas of the market. The problem now is, when you take a look at those same areas of the market that should benefit by a Trump presidency, you have to also factor in the fact that the rest of the market knows now that Trump is president, that he does, Republicans do control both houses of Congress. And so when you're making those bets, you're not just betting on, will, we see a lower regulatory environment benefit financials, for example, or fossil fuel companies, but has the market already priced that in appropriately? And it's a nuance, and, I think those of us in the industry obviously get it well, but for the average investor, sometimes it gets missed, and folks are now trying to crowd into a trade that's already pretty priced into the market.
As you know, usually, especially in election years, you tend to get a bulk of the gains after election day into year end. A lot of those gains, though, have been front loaded. If you think about the S&P 500, even the first 3 quarters of this year, it was on pace for its best start to a year since 1997. So when you're thinking about even the last 2 weeks, actually, if you look at the equal weight index SPW for the S&P 500 over the last 2 weeks, or the Russell 2000, actually both either flat or lower too, giving up those initial gains following election day. Where do you position? Where do you tell your clients to either buy or sell going into year end?
Yeah, I think you're absolutely right. I think there was a lot of euphoria. There was a, kind of a similar reaction to what we saw in 2016, where the expectation just generalized outside of just the sectors and industries that stand to benefit, but also just a generalized expectation that we're going to have pro-business policies. Corporations will benefit from the lower regulations. For tax cuts extended, and, generally a favorable environment from that perspective as well. I think the one fly in the ointment obviously is inflation here, and the Fed, right? So, to the extent that we are going to be running this economy hot, you do have an issue with inflation rearing back, and that means monetary policy may not be as loose as we had hoped. And so when you see that original, jump in areas like small caps, right? When you say equal weighted, of course, that leans a lot towards small caps or value stocks. Those are areas of the market that would benefit nicely, if in fact everything's kind of rising, all boats are rising. But then there's kind of this realization that comes in that, well, if we haven't tamed inflation, monetary policy is going to be a headwind. We're not going to get the cuts that we thought we were going to get. And certainly for an area of the market like small caps, who might traditionally benefit, for example, from tariffs, right? Because they're not as dependent on imports, but they are interest rate sensitive.
So, what do you think our Federal Reserve does do? Because you talked about our economy running hot here, and certainly the data support that. And we've already had a couple of rate cuts. Can the Fed just stop here, pause for a little bit, maybe?
Yeah, I think. I think there's some evidence that happens, right? This market has been assuming rate cuts, sort of pricing in rate cuts pretty fast from the start of the year, right? When you think where we started this year and the expectation of rate cuts that were, and it was a pretty outrageous amount of rate cuts that we were expecting as we came into this year, given where the economy stood, right? They're really, and where unemployment stood. If you think about the Fed's mandate is inflation and unemployment, and, to the extent too that they're impacted by market expectations, nothing was really pointing to the need for all those rate cuts. Now we're in a position, they gave us that bazooka cut already earlier, the 50 basis points, they cut again. If it doesn't look like we've broken the back of inflation, I don't think it's too much to think that even in December they might hold. I don't think that's the base case, but I think it's possible. And I definitely think, the terminal rate could be a little higher than what we expect, and the speed with which they move could be more extended than what the market is hoping for and has been pricing in. Because again, I mean, if you think about what is failure for this Fed is letting inflation, which ran rampant, during this term, rear again.
I have to bring up bond yields, especially because if you're looking at the 10-year, the low this year was around 3.6. It's actually up almost 80 basis points to around 3. Actually, right now is around 4.4, and the high this year is around 4.7. So what about when it comes to the equity market versus what's happening in the bond market? Because of the torrid run we've seen in yields, at what point does it put more of a lid on the gains here in the equity market?
Yeah, I mean, you'd think in the 4 or 5 range, right? It's interesting. There's a lot that goes into those yields, right? And some of it, of course, and hopefully a lot of it is expectations of future growth, and that's a positive, and that would be a great thing if that's what's driving it. And maybe it becomes less restrictive for the stock market if that's the case. On the other hand, is there a concern about the deficit? And this is, bond vigilantes kind of issue. Again, a lot goes into that number, and certainly too, obviously, inflationary expectations. So I do think, which we are obviously, when you're flirting in the 4 or 5 range and, even higher, there is an expectation at some point that is going to have an impact on equity markets, that is going to make things more difficult for equity markets. I mean, there's a lot going into the equity market calculus right now. Overall, I would say, and to your point earlier, on how you advise people to invest, I would say we talk about diversification. We obviously don't push one sector over another per se. It's very much we're with retail investors who should have very diversified portfolios that match their risk tolerance. And very much we would say stay in the market. Don't try to time the market. Be at your risk tolerance. Be in that diversified portfolio, and perhaps consider the fact that you have a very concentrated market in something like the S&P in a market cap weight. Does it behoove you to tilt a little bit towards some of the areas of the market that they could benefit, right? I mean, we talked about there's pros and cons there, but over the long haul, probably add some value to the portfolio to have that diversification benefit.
All right, Dana, thank you so much for joining us. As always, Dana Duria, she's the co-CIO of Envestnet, giving us her thoughts on these markets. S&P futures just pretty much unchanged here. The Dow up 40, the NASDAQ down 24. With our news in New York City, Mr. John Tucker.
All right, Paul, Jess, and Lisa. Donald Trump has a new choice to lead the Justice Department. The president-elect nominating former Florida Attorney General Pam Bondi to run the DOJ. Let's get more of this report from Bloomberg's Denise Pellegrini.
The selection of Bondi comes after Trump's first pick, Matt Gaetz, withdrew from consideration. The former Florida congressman faced scrutiny over allegations of sexual misconduct. Gaetz denied them, but he lacked enough support among Senate Republicans to be confirmed. In Bondi, the president-elect is elevating another longtime ally with Florida roots. In the first Trump administration, Bondi worked out of the White House, assisting in communications related to Trump's first impeachment trial. As Florida AG, Bondi earned national attention for her efforts to overturn the Affordable Care Act. Denise Pellegrini, Bloomberg Radio.
And Matt Gaetz may be out as Attorney General and as a congressman, but he could still face pressure over his health ethics investigation. Meantime, Gaetz' campaign spending under scrutiny. Federal filings show the former congressman's campaign spent 19% of its donations to the payments processor Stripe. The campaigns typically spend 1% to 4% on payment services. The Gaetz team says not all that money went to Stripe, but the company doesn't break down which vendors received the funds. As President-elect Donald Trump weighs his Treasury Secretary decision, the Wall Street Journal says he's discussed naming Kevin Warsh for Treasury, then moving him to the Federal Reserve when Chair Jay Powell steps down in 2026. The U.S. confirms Russia has fired an experimental intermediate-range ballistic missile at Ukraine. President Vladimir Putin said the attack was in retaliation for Ukraine's use of American and British-made missiles earlier this week.
We consider ourselves entitled to use our weapons against military facilities of those countries that allow their weapons to be used against our facilities. And in the event of an escalation of aggressive actions, we will respond decisively.
In a televised address in Russia, Putin warned the U.S. air defense systems would be powerless to stop the new missile. More than 60 years after President John F. Kennedy was assassinated, conspiracy theories still swirl Any new glimpse into the fateful day of November 26, 1963 in Dallas continues to fascinate. President-elect Trump promised during his re-election campaign he would declassify all of the remaining government records surrounding the assassination. Well, today's 61st anniversary is going to be marked with a moment of silence in Dealey Plaza, where Kennedy's motorcade was passing through when he was fatally shot. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Jess, Paul, Lisa.
All right, JT, thank you so much. We appreciate that. Jess, where are the Aggies this weekend?
Okay, they are playing Auburn.
Oh.
Yeah, okay. So there we go. And then, of course, the following week after that's going to be the big one against that other school in Austin.
Exactly.
University of Texas.
That'll be a big one because you guys are, what, 7-2?
Yes.
I think you're ranked.
Yes. We are, I believe, still 15th.
Okay, they're 15th.
We were briefly at the top 10, but you know what? I'll take it. I'll take it after the last few seasons.
All right, I'm going to give you this win against Auburn this weekend, setting up 8-2 against UT. That'll be
first time we'll be playing them in over a decade.
And where do you play?
They're going to be at College Station, Texas.
College Station,
Let's
Texas.
go.
I think we can kind of
Get
rotate.
Tom
We'll
Keene
get Tom Keene. We'll get the Gulf Stream, the Surveillance Gulf Stream. We'll head out to College Station. All right, there you go. Texas Aggies football update from Jess Madden. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mix, and this is as geopolitical tensions continue. Russia yesterday said it launched a new kind of missile into Ukraine. We have NASDAQ futures down 0.2%, 40 points. S&P futures, little change, down 5, and the Dow futures, little changed, up 32. The 2-year yield, 4.33%. That's up, down 1 basis point. Try it again. 10-year yield, 4.39%. That's down 2 basis points. We head over to currencies. The Bloomberg Dollar Spot Index up 0.2%. We have the Japanese yen stronger, euro, British pound weaker, and we have Bitcoin right now at 98,415. Few companies making news. That's Apple, said to be developing a more conversational version of Siri. That's a digital assistant. It's going to use more advanced large language models that will help it with back and forth dialogue. So now you can talk back and forth with Siri pretty soon. Ken Griffin said he's going to be open to selling a piece of Citadel. It's during an interview with Bloomberg. He said he would consider a partner like Sequoia Capital, and also ruled out an IPO. And Adani Group companies advanced after a $27 billion rout yesterday. That was following a U.S. indictment against Gautam Adani over allegations of bribery. The company has denied those allegations, but shares of Adani Group up 2% in India. At this same time yesterday, they were down about 22%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Jess.
All right, Lisa, thank you so much. We appreciate that. Lisa Mateo with our Bloomberg Business Flash. Jess Met and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. EcoGo, E-C-O. We got some economic data coming out later today. Jess, we got the some S&P PMIs coming out on the manufacturing services and composite. Then at 10 o'clock, our good friends out there at the University of Michigan have some of their economic data here.
That's
so
right.
We'll get a read.
And also, if you look at the latest update to the Atlanta Fed GDP model for the current quarter and the fourth quarter, it's around 2.6% here, just marginally lower than the 2.8% in the third quarter, but still, nonetheless, Paul, pretty strong growth here going into year end.
All right, so there's a lot for, if you're an economist, to kind of sink your teeth into. Lydia Bussour, senior economist at EY Parthenon. Lydia, what part of the economy are you focusing on mostly here? I think the Fed feels like it's got inflation under control, and I think they're looking at the labor market. What are you looking at?
Yeah, I think that's right. We have an economy that's showing resilience. We've seen robust economic momentum in the past 2 quarters. We have strong productivity growth in the U.S. Now, the key question is, is the labor market going to continue on that softening trend? And is inflation going to remain on that disinflation path? So we're, closely focused on that, especially heading into the December Fed meeting. If we look at the inflation picture, we continue to see some disinflationary factors at play that are likely to be pushing inflation lower as we head into 2025. So we continue to see disinflationary fundamentals. We have that labor market that has rebalanced, easing wage growth. We have less pricing power and reduced markups as well, and more housing disinflation. And on the labor market front, we got a lot of noise in the data because of the hurricanes and the strike. I think the next jobs report is still going to have, some of that noise, but we think that the underlying trend is, towards a softening. So we see further softening and the unemployment rate drifting higher as we head into 2025.
So what do you think this ultimately means for the trajectory of Federal Reserve interest rate cuts?
Well, I think what it means is that the Fed still has a little bit of room to recalibrate and continue on that recalibration path. I think the Fed is still on board with that gradual recalibration of monetary policy. So as we head into December, I think, the Fed is likely to be cutting by 25 basis points in December because we're still well into restrictive territory and because inflation is still on track. The labor market has softened. So I do think there is a little bit of room for that recalibration to continue. Now, the key question is, what happens in 2025? And our view is that given the uncertainty on the policy front, given the fact that the economy is showing resilience and the potential of side race to inflation, the Fed is going to be proceeding more slowly than we were anticipating before. So we expect a rate cut at every other meeting next year.
So, Lydia, what's the key issue here as you think about maybe a different political landscape here over the next several years with a Republican president and a Republican Congress? How does that change, if at all, kind of how you're thinking about this economy?
Yeah, there are a lot of moving parts when you think about some of the policies that could be put in place and a lot of uncertainty surrounding both the policy priorities that are going to be coming and also the timing of these policies. If you think about the potential for tighter immigration restrictions and the potential for higher tariffs and more fiscal spending and the extension of the Tax Cut and Jobs Act at the end of 2025, which we think is now likely, that lends upside risk to the inflation outlook. So as we look into the outlook for U.S. growth and inflation, we've looked into essentially slightly higher inflation, somewhat higher inflation in the 2026-2027 horizon. And then when it comes to growth, some potential upside risk in 2025 on the back of deregulation and potential boost to business investment and activity. And then looking into 2026, we have the impact of tariffs which are going to be, a drag on growth and a potential offset from fiscal policy as well. So there are a lot of moving parts, but when it comes to the inflation outlook, the risk is to the upside in this type of policy environment.
As you know, when we got those BLS revisions for the labor market earlier this year, Goldman Sachs was talking about how when it came to undocumented workers, it was not counted in those numbers, and there could be up to about 1 million when it comes to that. Especially when you're thinking about the Trump administration and their plans for mass deportation, what kind of impacts do you think that could have ultimately on the economy when you're thinking about different industries that help support, especially when you think about a growth and things that are being driven by consumers?
Yeah, when you think about the labor market and the rebalancing we've seen and the type of trend that we're going to see in job growth and also labor force participation, we've seen a significant rebound in immigration. We know it's been fueling that resilience in the labor market and that rebalancing. So as we look into 2026, 2025, 2026, and the potential for tighter immigration restrictions, there is a risk that, that restraint in the labor supply essentially creates some inflationary pressures in the labor market and acts also as a drag on the economy. So I think there is a potential downside risk from tighter immigration and also potentially the fact that we could see a tighter labor market with a restrained labor supply that essentially pushes up wage growth and keeps inflation somewhat stickier than previously expected.
Lydia, what's your 2025 GDP outlook for the U.S.?
Yeah, so we're in an above trend type of growth environment today. Our view is that we're going to be going back to a trend pace growth of 2% for the U.S. So we have essentially growth gently easing into 2025, and that's really on the back of that softening in the labor market that we've talked about. We've seen essentially job growth decelerating quite a bit. We've seen less churn in the labor market, and that softer type of job growth is going to feed into slower labor income growth and slower consumer spending growth. We don't expect a retrenchment, but we do think that the type of consumer spending we've seen in the third quarter is not a sustainable type of consumer spending growth, especially given the consumer caution we're seeing,
right.
And the fact that some households are feeling stretched by those higher interest rates and still high prices.
Lydia, thank you so much for joining us. We always appreciate getting a few minutes of your time and your insights. Lydia Bussour, she's a senior economist over there at EY Parthenon up there in Boston. Thanksgiving plans, what's the deal? You don't go back to Texas, do you?
So I will be working next week. I think next Friday. Am I with you?
Yes, of course.
All right, so it'll be the two of us. So I'll be filling in for Tom Keene. So I'm not going out of town since I'll be here next week. But for Thanksgiving, I'm going to be, I think, near the Catskills for my boyfriend's friends are doing a Thanksgiving thing. So we're going to be
you can go up there and do that
there.
up in the Catskills. That'll be cool.
Yeah.
It looks like they got finally a little bit of chill in the air up there. We got a little bit of snow north and west of the city. We had some precipitation, which is the first time I've seen anything in like 3
It's been a while.
It's unbelievable, the drought here. So we could certainly use any kind of precip coming our way. And I think we got the next couple of days we'll have some more. So we'll see how that goes. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures. This is as investors turn to other sectors for better value after this month's rally in U.S. equities. We have NASDAQ futures down 0.1%, 26 points. S&P futures, little change, down about 2 points. Dow futures are up about 37. We head to the 2-year yield, 4.32%. That's down 2 basis points. The yield on the 10-year, 4.38%, and that's down 3 basis points. To currencies, the Bloomberg Dollar Spot Index up 0.2%. We have the euro weaker, British pound weaker, Japanese yen stronger, and we have Bitcoin nearing that 100,000 mark now, just above 97,000. Shares of Reddit down 7%. The reason why? Well, sources say shareholder Advance magazine publishers, they plan to borrow against its $1.2 billion Reddit stake. Reddit stock has climbed more than 300% since its March IPO. And Couche-Tard says it's not considering a hostile takeover bid for Seven & i Holdings, while it's going to keep that proposal for a $47.3 billion buyout on the table. That's according to a report from Nikkei. And finally, sources say DirecTV calling off its planned acquisition of Dish after bondholders rejected that debt exchange. That is a Bloomberg Business Flash. Paul and Jess.
That is ugly stuff right there. All right, very much, Lisa Mateo. Thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in wet New York City, but we will take it, folks. We need the rain. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast. Economic Indicators today brought to you by Commonwealth, joined over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. And they throw good conferences. Alex Steele and I go to them every year. Good stuff. We meet some smart people down there. Lauren Goodwin joins us, Chief Market Strategist and Economist for New York Life. She braves the rain, comes into our New York studio, not mailing it in. Lauren, you got a research piece out. You're looking at the earnings from this past season, and you kind of say, hey, we got two Americas out there. What do you mean by that?
Well, it's really leveraging a Tom Keene sort of topic of the decade, but there is a very clear bifurcation in not just the consumer, but also in corporate America. And what I mean by that is if you have a little bit of investment money, a salaried job, you are doing, despite everything, just fine in this economy. You've been making money on your money, including your cash. Your salary's been keeping up with inflation. But for those that benefited in the early days of the pandemic from stimulus checks, from strong wage growth, the lower income consumer is really, really struggling with inflation, with the cost of capital. And that exact same thing is happening for companies. And so what it means is a couple of things. First, the biggest risk to the economy, and this is a little bit backwards, the biggest risk to the economy, I think, in the next year is a 20% pullback in the S&P 500. Because so much of this economy is driven by consumer spending, and so much of that wealth effect and confidence is sitting in the equity market.
And especially because if you go back, the down years for the S&P 500, back-to-back gains over the past 2 years, on pace for over 20%. We haven't seen that since the dot-com bubble. But also the only down years, 2022, we had the bear market, and then 2018, because there was that big sell-off of that final quarter, and that December was like the worst quarter since 2008. But other than that, it seems kind of tricky because we're so early into a bull run. The S&P 500's up like 70% since the low in October of 2022. That's not even like half the average of a typical bull run. So, what would really it take to see a down year and not just have like an average type of gain of around 9 or 10%?
Any number of things, and it's not really even our base case that we would see that drawdown. It's just a reflection that this economy, though incredibly robust, is starting to see its frays on the edges. And I think what that means is that if you have our base case, which is a pretty good year, we're expecting 5 to 7% on the equity market. Might not feel so great after the last couple of years that we had, but it's.
I'm wondering too. 5 to 7%, is that more because of the broadening out, and so you'd see more like equal weight, small caps, other things taking part? So then the ones that have been the bigger weightings, like the Mag 7. It's like still there's strong gains. It's just you're seeing other parts of the index catching up. Is that the case for next year?
Yeah, I think it is part of the case for next year. Really, 5 to 7% is a function of economic growth right now, 3.5% real. That's wild. And I expect growth to slow back to trend. That's still a good economic outcome. It's just also still slowing growth from where we are today. And that's an environment where you do need to see more of the S&P 500 do the work. We're not enormously bullish on small caps or junkier stocks because of this bifurcation we're seeing in the economic environment. But what it means is that you probably have leadership ebb and flow a bit more over the next couple of years, whereas there's been a pretty clear dominant leadership from the Magnificent Seven as a result of AI.
Lauren, when we all woke up on Wednesday 2 weeks ago with a new president and now a decidedly Republican-led Congress. Did that change your outlook of the markets at all, or how you think about opportunities?
It's such an important question because I think over those same couple of weeks, we've been sort of grappling with what are the Trump trades and now what are the Trump trade-offs? Which of those knee-jerk reactions are going to sit with us? And there are a couple that I think will, and those are the ones that are accentuated by some of the things we already knew. First of all, that growth has been stickier, inflation been stickier than even year after year economists like myself have expected. That when you add uncertainty around how much government spending we'll have, points to higher and more volatile interest rates. It means that even though credit quality is pretty strong, we need to stay short duration or focused on structured credit from my perspective. Another one that I expect to stick with us for the same combination of reasons is the strength in the US dollar.
Yeah.
When you see the US dollar weaken, it's because ex-US growth is outperforming. And I just don't see any path to that in the next year. Doesn't mean we'll keep seeing gains in the dollar like we've seen in the past couple weeks consistently. It just means that we're likely to see that strength persist.
That's interesting because the DXY, if you look at this right now and you kind of draw it back to 2021 in that time frame, it's bumping up that resistance that we would have seen back about a year ago in 2023 and then going back to 2021. But is that kind of the biggest risk to potentially more robust gains in the equity market if you continue to see dollar strength?
I think the biggest risk to the equity market is rates, but they're not driven by 100% exactly the same things, but they have a lot of the same underlying contributors, namely that U.S. growth has been outperforming, U.S. inflation has been outperforming. That keeps rates sticky, unlikely to see the volume of Fed cuts that we'd expect, and that also, of course, keeps the dollar higher.
What did you take away from this earnings season that we're just kind of wrapping up here? What did it tell you?
Well, it told me that this sort of bifurcation of the consumer, bifurcation in quality that we're seeing is persisting. And though, as I do expect that we'll see more winners, not just from the AI trade as it broadens into energy and electrification, but also from the market in general as growth sort of stabilizes. But that demands a asset allocation shift over the course of the year, a new focus for investors really reflected in that data.
Something else I've been keeping a close eye on too is looking at S&P 500 earnings, but excluding energy, because that was the one that saw kind of the biggest markdowns coming into third quarter earnings season. And right now, I mean, the growth is still around 10, 11% when you're excluding that sector. Going into next year, even those revisions look like it's more commodity driven. How do you view energy in particular, and do you still think the other parts of the index will still hold up for next year when it comes to earnings growth?
I am relatively constructive on energy because I think that not only is it an important part of the administration and the sort of Trump trade dynamic just from a sentiment perspective, but increasingly it is the bottleneck for artificial intelligence. There's lots of really cool and interesting stats about how we as a global economy need to add Germany's size of electricity production over the next couple of years to keep up. Increasingly, chip makers have been able to keep up with Moore's law, but energy efficiency hasn't kept up. We need more energy per unit of compute now already than was the case a year ago. And so that constraint on one of the most important trends in the economy, I think, involves more capital-intensive investment in support of that sector.
Tom Keene and I and some others, we were part of a AI panel that's hosted by Bloomberg Intelligence a couple of days ago here in New York. AI, I mean, how do you think about it? How important is that to you as a strategist and an economist?
Well, it's important in two ways, at least two ways. One is the broader economic trajectory that we're on and the idea that this capital intensity of not just AI, but re-globalization, it does give us a medium-term constructive outlook. When you think about the private capital markets or a long-term view, you do see a lot to be constructive about in terms of just investment needs related to this trend. But the other thing that's important as a strategist is just the acknowledgement that though every every move up in the Magnificent Seven has been justified by earnings. We are beginning to see their constraints. We are beginning to see more competition. I don't know that that plays out in the first half of 2025, but the broadening of the trend into infrastructure and then eventually into corporate use cases will mean a broadening in S&P 500 earnings.
Lauren, thank you so much for joining us. Really appreciate it. Lauren Goodwin, she's the chief market strategist and economist at New York Life, making the trek over in the rain today to our Bloomberg Interactive Brokers studio here on East 58th Street with our news in New York City. John Tucker.
All right, good morning, guys. A new choice by Donald Trump to lead the Justice Department. The president-elect nominating former Florida Attorney General Pam Bondi to run the DOJ. Let's get details in this report from Bloomberg's Doug Krisner.
The selection of Bondi comes after Trump's first pick, Matt Gaetz, withdrew from consideration. The former Florida congressman faced scrutiny over allegations of sexual misconduct. Now, Gaetz denied them, but he lacks support among Senate Republicans to be confirmed. In Bondi, Trump is elevating another longtime ally with Florida roots. In the first Trump administration, Bondi worked out of the White House, assisting in communications related to Trump's first impeachment trial. And as Florida AG, Bondi earned national attention for her efforts to overturn the Affordable Care Act. In New York, I'm Doug Krisner, Bloomberg Radio.
And President-elect Trump still hasn't made a decision on his Treasury Secretary, but according to the Wall Street Journal, he's considering naming former Fed Governor Kevin Warsh to lead the Treasury Department and then putting him in charge of the Federal Reserve when Jay Powell's term ends in 2026. At the same time, Trump could pick a Key Square Group founder Scott Bessent to lead the National Economic Council and then take over Treasury if Warsh becomes Fed chair. Aides tell the Journal Trump could change his mind. He's also considering Apollo Global Management CEO Mark Rowan for the Treasury position. The Federal Aviation Administration says it expects the upcoming holiday weekend to be the biggest Thanksgiving travel period ever. The TSA administrator, David Picosi, says this year saw the first 3 million passenger day, with a new record expected this Thanksgiving weekend.
Sunday following Thanksgiving, which is always our busiest day, it's the busiest day of the year typically in passenger travel. That will be a day that will have more than 3 million passengers, we project.
And we all know Santa is working overtime right now. Yes, he is. Getting all those toys ready for the holidays. So here's the inside scoop on what your kids are going to be asking for this year. According to the National Retail Federation, the top 5 toys for boys include Legos, Hot Wheels cars, video games, and PlayStation. Basically, nothing's changed in the past 30 years. Girls also looking for Legos, along with Barbies, dolls, beauty products, Disney items. TV shows and movies continue to influence the top toys. Spider-Man and Barbie remaining popular among kids. Remember back in the day, Paul?
Yep.
Christmas, we would just get a shiny new penny and an orange.
Exactly. Back in the day.
Back in the day. No, not really. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Jess, Paul, Lisa.
All right, John Tucker, thank you so much.
Love
Bloomberg
it.
Surveillance this morning brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. The best Christmas present of my life was Fisher Redmaster skis.
Ooh.
I was probably 12. To this day, the best present of my life. What do you got, Jess?
Oh man, I feel like I always liked getting Barbies. I feel like I was pretty simple.
Lisa?
Yes, we did the Barbies.
Yeah,
and the
I feel like we
Mansion,
were. Or the
Barbie-
American Girl
Yes.
dolls too. I had the
That
little
was my
Wally
daughter,
one.
yeah.
Yes, I got those.
Those
a lot
are
when I was a kid,
pricier
too.
than Barbies,
Yeah.
let me tell you that much.
Samantha, yeah.
Yeah, one year when I was really young, my older brother literally put coal in my stocking.
Whoa.
No.
Crushed me. And to this day, there's still it's, you know, it got
The
the
dust
coal
of it?
residue. Yeah.
Oh,
40
my
years later, 60 years later, whatever it is. So anyway, that's how we rolled in my house back in Trent, New Jersey, back in the day. Rough times. S&P 500 off 6 points here. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got a mix of red and green on the screen. This is as we get into the end of a trading week. Right now, the NASDAQ futures down 0.1%, 39 points. S&P futures, little change, down about 5. We have Dow futures, little changed, up about 11. We have the 2-year yield at 4.33%. That's down 2 basis points. The yield on the 10-year, 4.39%, and that's down 3 basis points. To currencies, the Bloomberg Dollar Spot Index up 0.2%. We have the Japanese yen stronger, euro, British pound weaker. We have Bitcoin at 97,765, getting closer to that 100,000 mark. Digital assets that were flagged as unregistered securities by the U.S. SEC, well, they're rallying. That's after Chair Gary Gensler announced his plan to step down. So, for example, XRP, that's a token that's linked to Ripple Labs, it's up 18%. Then you have the ADA token that's linked to Cardano blockchain, that is up about 11%. On the economic calendar for today, well, we have a read on sentiment. That's from the University of Michigan, and that takes place after the election, so that'll be interesting. And also S&P Global, that will issue data on American manufacturing. Companies making news, JP Morgan Chase, the U.S. Treasury Department examining its relationship with a hedge fund that's said to be part of a network overseen by an Iranian oil trader. And finally, another portfolio change for Honeywell. It's agreed to sell its PPE unit in a $1.3 billion cash deal. Now that comes as its activist investor Elliott Investment Management, it's been pressuring the company to break apart. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The S&P 500 Utilities Index, it's up 29% year to date.
That's right.
I mean, utilities.
Of course, because the data center type businesses that are within it.
Such a scam. Our next guest, nobody wants to talk to at a cocktail party because he covers like utilities.
They want to talk to him now because that's an AI play.
I know.
Exactly.
That's what
AI's sexy now.
It's sexy now.
Don Dimitrievich.
Yep,
Head of Energy Infrastructure Credit
go.
and Portfolio Manager Naveen joins us here in our studio. So Don, talk to us about how you think about our energy grid. Are we there? Are we prepared for AI? Are we prepared for the next leg of this economy?
Yeah, Paul, great question and great to be here. So I think just on that point, we are at what I believe is a historic moment. We're seeing this resurgence in terms of power demand growth to the extent that we haven't seen for decades. And part of it is a result of AI. You know, you take a look at how much power demand is going to come from all this data processing. And just to give you an anecdote, when you do a ChatGPT search, it takes 10 times as much power as a typical Google search. And you start thinking through, as companies embed AI into their businesses, the amount of power that's going to require is hundreds of billions of dollars of investment. And then you take a step back and think about our grid. There was one study done recently by one of the technical engineers, Black and Veatch, and that's going to require something in the order of $1.5 to $2 trillion to bring our grid up to speed. And you take a look at the power lines, 60% are beyond their 50-year life expectancy. So you can just imagine we've got all this demand growth for power coming up, and at the same time our grid is not in a position to really take on that load.
So what are the top kind of companies that will benefit when you're thinking about in the utility space? Because we know about some high flyers, especially this year, like Vistra and some others that have really taken off.
Yeah. I think you're going to see the whole sort of complex around power generation. So think of IPPs, independent power producers, any company that's either providing the actual energy supply, the power capacity to help support that growth. And then you think of all the companies that are building the equipment. And one of the things we've talked a lot about over the years since COVID is the supply chain delays. In the energy and electricity sectors, we're still facing some supply chain delays. Transformers, there's a 2-year wait for that equipment. So companies that are involved in the build out of that equipment will benefit from this secular growth. And I think that's an important part because obviously a lot's been made in terms of the political election results with President-elect Trump potentially repealing the Inflation Reduction Act. The reality is we have significant power demand growth, irrespective of the politics.
So how does the U.S. power grid and the Texas power grid, which is its own thing in and of itself, who pays for all that stuff? Is that the government?
Well, at the end of the day, it's really the taxpayers pay it one way or another, right? Because ultimately that power goes to support businesses, and they pass that cost on to the consumer and to the retail, residential users of power.
So what about when you're thinking about the dynamic of Congress, when you have a Republican-controlled dynamic there? What does that mean for potential policy changes in that particular industry?
Yeah, it's a great question, and frankly, no one really knows exactly how this is going to play out. There's a lot of political rhetoric around repealing the IRA, but when you take a look at the fundamentals here, we've talked about it. This is a very supportive fundamental market, right? We have a lot of energy demand growth, and so we need a lot of solutions. President-elect Trump and the Republicans, I think, are very supportive of oil and gas, and we expect to see a lot more energy supply coming from that part of the energy complex. But when you sort of think through the IRA and some of the support for the onshoring of the supply chain so that we're not reliant on China for 90% of our solar panels, that's going to create a lot of jobs here in the U.S. if we build it domestically. And you take a look at a lot of the projects that have been announced or are being invested in currently, 80% of those investments are in Republican congressional districts. So when you sort of take a step back in terms of the rhetoric, I think what we're going to see is a fairly supportive environment in terms of building this all out because the fundamentals are there.
How do you envision, or how do you, position your portfolio for this transition that we're in the midst of to cleaner energy? Do you have a sense that this is going to continue apace or maybe slow down? How do you think about that?
Look, I think you're going to continue to see the development and build out of renewables, and take a look at Texas as a market, which obviously very pro oil and gas, but they're also it's actually the top solar market in the U.S. Above and beyond California, and I think part of that is because on a cost basis, renewables are competitive with traditional power generation. So you're going to see a continued build out of that. You're going to see a continued build out of energy storage, which basically allows you to take the excess power being generated in the middle of the day from a solar project and dispatch it in the evening hours. So that's a huge opportunity as well. I think you're also going to see some of the states that are probably more pro clean energy lean into it as the federal government maybe takes a step back.
And Trump has actually said that he would reverse and you were talking about this earlier, the Inflation Reduction Act, by de-obligating any funds that were unspent and eliminating tax credits for zero carbon energy and electric vehicles and other clean energy activity. What do you think that really means for when you're thinking about like offshore wind and things like that and in its relation to this kind of dynamic with clean energy?
Yeah, I think there are some areas that are definitely going to be impacted by a repeal or an amendment or changes to the Inflation Reduction Act. Offshore wind is one of those segments where I think you really needed some government support or some subsidies to really make it economic. And so as we sit here today, it isn't economic. And so I think you're going to see that area probably get less of an investment in the near term as a result of potential changes.
So just real quickly, what's the best opportunity out there you see right now? 30 seconds.
I think you're going to see a lot of opportunity in power generation, whether it's renewables, whether it's energy storage, whether it's nat gas generation. You really, if you just take a simple step back, we need an all-of-the-above approach to energy solutions.
Interesting. Don Dmitrievich, thank you very much for joining us. Head of Energy, Infrastructure, Credit, and Portfolio Manager, a reformed lawyer. So finally, you got out of that racket.
And an engineer. Thanks, Paul. Thanks for having me.
Wow. An engineer. Good stuff there. Looking at WTI crude oil, speaking of energy, because Alex Steele, she's our energy czar, of course. Below $70 a barrel, just at $69 and change there.
Trading around the lows close to the year. I think it's around 65 was the low for this year.
I'm going to throw out Tom Keene on here. We'll throw out a little Bitcoin reference. We're down $350, still about $98,000 per token. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved the soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
It's 9 o'clock on a Friday morning. Let's get to it. Mike McGlone, senior macro strategist at Bloomberg Intelligence. We're going to talk to him about Bitcoin. We're flirting with 100,000. I want to ask him about nat gas, oil, all that kind of stuff. He's a commodities dude. We can talk to him about anything. We might even talk some pork bellies today. Dooley Rodrigo, principal at KPMG Risk Advisory Solutions. Talk about the firm's findings about Black Friday spending. How's the holiday spending season going to be for our retail friends? Wendy Benjaminson, she's a senior editor of Bloomberg News. We're going to talk about the Trump transition, Mr. Gates withdrawing his nomination, and kind of where the maybe some of the picks come going forward. And then it's Friday, and it's in the fall, so that means we talk Harvard football with the Harvard football coach.
Let's do it.
Busy 9 o'clock hour coming up. Let's kick it all off with Lisa Mateo on a Bloomberg Business Flash.
You got it. We've got futures mixed. Investors trying to shrug off those initial concerns over NVIDIA's revenue outlook. NVIDIA shares down 0.5%. We have NASDAQ futures down 0.2%, 48 points. S&P futures down 0.1%, 6 points. Dow futures up just a fraction, up 17 points. We have the 2-year yield at 4.33%. That's down 1 basis point. The yield on the 10-year 4.40%, and that's down 2 basis points. To currencies, the dollar on course for an 8th straight weekly advance. Right now, the Bloomberg Dollar Spot Index up about 0.2%. We have the euro dropped to its weakest level since 2022. Right now, the euro down 0.3% at 104.34 against the dollar. British pound weaker, and we have Bitcoin nearing that $100,000 mark at 97, just over 97,000. To earnings we go. We'll start with Gap, the owner of Old Navy, Athleta. Their shares now up 19%. Raise its full-year sales outlook ahead of the key shopping season. And of course, value, that's where it's going to. Shares of discount retailer Ross Stores, their shares up 7%. Over those discounts, it lifted its annual projections for earnings per share. And finally, shares of Intuit, the maker of TurboTax, down 2% after its forecast. Well, that fell short of estimates. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess meant sitting in for Tom Keene. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Bloomberg Surveillance today. It is brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com. All right, Matt from I guess Westchester writes in and says, what is going on with Bitcoin approaching 100,000? This might be the Matt who also forgot his token number and is just asking for a friend here. But let's go to Mike McGlone, senior macro strategist for Bloomberg Intelligence. Mike, you're the only one that's explained to me what's going on here with this Bitcoin. So I guess it's just more buyers and sellers here?
Definitely now, Paul, more buyers. You're looking at this month alone, ETF flows in ETFs are approaching $6 billion. That's the biggest month ever. Total ETFs tracking Bitcoin now around 120 billion. To put that in context, that's about half of what you see the total amount tracking gold, which is about 220 billion. So it's catching up really fast. A year ago at this time, total ETFs tracking Bitcoin was around 10 billion. So massive buying for good reason. We have a crypto president, remember, knows out like a convert. When he was president, he thought cryptos were a scam. And now he's realizing, oh boy, this basic space tracks the dollar. But Paul, we've had some major double dog dare potential peak signs lately, and I'm really concerned about it. I'd like to tell you about.
Well, talk more about that, because it looks like it's up about 40% just so far this month. So how much more gas is left in the tank here, and where are you looking at for like resistance and support levels?
Well, there you go, Jess. The key level everybody's looking at, round number, $100,000. I first mentioned it almost, I think it was 4 years ago.
Yep.
Kind of fell off the horse for a little while. But, just the diminishing supply, increasing demand and adoption. But there's a key thing So 100,000, very good resistance. It's traded it in futures, but that's a little different. The key thing I'm watching is Bitcoin versus gold. Right now, that ratio, it takes basically about 36 ounces of gold for one Bitcoin. The all-time high is still in place. That was 37 in 2021. But there's one key headline that really struck me yesterday I was really concerned about. It's the lessons you learn in a trading pits, and it's never mess with the market gods, particularly if you have profits. You kind of should be modest about this. Here's a headline in Bloomberg Terminal. Warren Buffett destroying $3 billion a month of Berkshire capital by not investing in Bitcoin, says MicroStrategy's Michael Saylor. I saw that, and I remember Michael Saylor, here's one of the persons who really kicked over my bullishness in 2020. That was in the back of the Attorney General in New York coming down in Tether in 2019. It all proved how bullish Bitcoin is. But now when you double dog dare markets like that, I think you got to be careful.
So I don't know, Mike, maybe I'm wrong on this, but I kind of think of this as a commodity. How do you, can you put valuations on commodities, or do you, I know in the past you've kind of talked about it in relation to other commodities, in this case, gold.
Yeah, definitely. So I look at versus gold. So one thing I'm about to point out today, Bitcoin's actually dropping a little bit down at 90, just below 9,800, and gold's up over 1%. Part of that is the re-escalation of global tensions, most notably in Ukraine. But you don't. It's diminishing supply, increasing demand and adoption. We get that. That's why I pointed out right away. Massive inflows in ETFs. But one thing about this space, Paul, it's the most widely traded speculative digital asset on the planet ever. 24/7. Come Saturday, Sunday, sometimes I can't stop watching it because it gives you indication what's going on. So everybody trades it. There's massive arb going on. A lot of people got a little bit too short MicroStrategy and got stopped out. Now we have some bigger people doing that, so that got too expensive. But number one thing, I think it's technicals and animal spirits right now.
Talk to us about Dr. Copper, because we know how closely it ties into the economy, not just our economy, but the global economy as well. What are you seeing there?
Well, Jess, I appreciate you going there, because to me, that's the number one commodity that has to go up to prove we don't have deflationary dominoes kicking over in the whole world. So Dr. Copper is broken below key support around $9,000 a ton. In terms of dollars, it's pushing in that key support around $4 a pound. It made a new high this year around $5.20, but it was on the back of massive speculative excesses in futures. Futures are just a lot of buyers who just got way overweight long. And the key way I like to point out with copper is on the month now, copper's down about 5%, and the Hang Seng Index is down about 5%. You see the connection there. It's all about China. And I look at that 10-year note yield in China, 2.08 on a CGB versus the U.S. It's 4.4%. That's a significant sign of deflation, lack of demand pull forces in China, complete dependence on stimulus. And we've seen this before in Japan. Japan's GDP at $4 trillion is the same it was 30 years ago. China's going that way. That's bad for copper. And the key thing I like to point about copper is if it breaks down, it adds legitimacy to declining crude oil, declining iron ore, declining grains, and it means the commodity complex is clearly showing global deflationary, recessionary trends. And gold's the only one that's really still going up.
What's the call in the energy front for you, Mike, these days?
It will start with what matters to Americans. $3 a gallon as the average price of gasoline. By this time next year, Paul, if you want someone to blame, I think it's going to be $2. Average value price of diesel in this country is just about $3.50. I think next year is going to be $2.50. It's not profound to say that because the last 20 years we've got to those levels. And the big significance is we are a net massive increase in everyday exporter of liquid fuels, crude oil, unleaded gas, diesel, maybe less. And we have diminishing, we have demand for diesel, and U.S. is declining. It's declining in China, in Europe, and India, and we have increasing supply. So if we just get a little bit of a backup in, say, the stock market, it pushes those prices down. So those are, I had in my headline recently, those are potentially Trump deflationary forces. And we do have this new leadership that's more drill at will, bring on the supply.
What about natural gas?
Yes, so this is peak season for natural gas. It's usually right before you get to January. $3 natural gas is near the peak. I think $4 is pretty high. The cost of production in this country is $2. That's been kind of the median mode. I think it gets back there once we get through January, and we have the normal trend in global warming happens in winter too. So basically right now you have to price in a bit of risk of a colder than normal winter. But what's been the trend? Warmer than normal winters, particularly in Europe. So that's the key thing. Is the bottom line for natural gas is the world's becoming increasingly dependent on LNG exports from the U.S., but it's still only about 20% of our production, and we still have a pretty good excessive amount of liquid fuels, natural gas, crude oil, ethanol, biofuels in this country, dependent on exports. And if we ramp up a trade war, that means we're going to have kind of supply bottlenecked in the U.S., which means lower prices.
Mike McGlone, thanks so much. We appreciate it. As always, Mike McGlone, senior macro strategist for Bloomberg Intelligence. We'll talk pork bellies next time. WTI crude oil sitting right at $70 per barrel. I paid $2.75 last weekend down at the Jersey
Oh, you
Shore.
know, it's going up. It's back up to $3, so 25-cent pop in the past few
Is that
weeks
right?
at the Wawa.
Oh, at the Wawa. We're 36 in Jersey, folks. That's the benchmark. With our news in New York City, John Tucker.
President-elect Donald Trump says he's nominating former Florida Attorney General Pam Bondi to run the Justice Department, elevating another longtime ally to carry out his agenda. Bondi's repeated Trump's claims that the department's investigations of his conduct have been laced with politics. And former Congressman Matt Gaetz taking his name out of the running for Attorney General, but there is still a push on Capitol Hill to release the House ethics investigation on the former Florida Congressman. Illinois Democrat Sean Casten sits on the Ethics Committee.
It matters for the integrity of the law, it matters for the integrity of this House, and it matters for the respect that we expect the American people to give us, that those of us entrusted with this job will uphold the United States as a land where all are treated equally under the law.
Democratic Congressman Sean Casten. And besides the misconduct accusations, Gaetz is facing campaign finance questions. Federal filings show the former congressman's main campaign arm spent $1.2 million on e-merchant fees to Stripe. That's the San Francisco-based fintech. That's about 19% of Gaetz's contributions. Campaigns typically spend 1% to 4% on payment processing. A warning from U.S. intelligence and national security agencies. It's about a sabotage threat from Russia. Let's get details from Bloomberg's Oliver Crook.
This is part of the sort of broader conversation that we've been having for a long time in Europe and in the United States about the sort of hybrid warfare that Russia has been waging in various different sectors, whether it's sort of in civilian infrastructure or just sort of some sort of psychological dimensions. And of course, this question of social media, all of these sorts of things. But this is specifically directed at defense companies, warning basically that there could be active Russian sabotage to operations in the United States and also abroad. And this is also coming as sort of Russian intelligence groups allegedly also try to identify and recruit individuals, sort of insiders of these industrial bases, to try to sort of convert them or get information from them.
Bloomberg's Oliver Crook says President Biden's outgoing administration has warned allies about the risks of stepped-up Russian sabotage if the U.S. and its allies allow Ukraine to fire Western weapons deep inside Russia. 1 week away from Black Friday, and we're kind of obsessed with deals. Black Friday usually associated with the best prices relative to the rest of the year. But how good of a deal are we really getting? This, according to Wallet Hub, 41% of the items will offer no savings compared to their prices before Black Friday. If you do plan to shop that day, the highest discounts are going to be on jewelry and apparel and accessories. By the way, I do need a new hammer.
That's not on the list.
Who doesn't need a new hammer?
A 22-ounce framing hammer, Jess. Global news 24 hours a day, whenever you need it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg.
No discounts on PlayStation 5s? That's something I got to pick up, no?
What do I look like?
Cut me a break, John Tucker.
I don't know.
So what are you doing? What are you constructing on the weekends?
The new bathroom is coming along. It was an old closet, turned it into a. Maybe I shouldn't say that because they're going to tax me more, aren't they? No, I'm not doing anything. Not doing anything.
The John Tucker household. Exactly. Oh my goodness. All right. Anybody shopping on Black Friday?
We'll be here. We're not going to be.
I know.
I'm
We're
going to
going
be with
to
Paul.
be back here. Tom's out. It'll be.
I'm here.
I might hit the outlets. Yeah.
You'll have to phone in to the three of us and give us a live report.
All right, very good. John Tucker, thank you so much. We appreciate it. S&P futures here. We've got 17 minutes to this open. We're down about 3 points. The Dow up 26. The NASDAQ off 31. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report brought to you by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, futures mixed. Geopolitical tensions continue. Russia said yesterday, you remember it, launched a new kind of missile into Ukraine. NASDAQ futures, little change, down about 19 points. Dow futures up about 29. We have S&P futures down about 2. We have the 2-year yield, 4.34%. That's little change. The yield on the 10-year, 4.41%, and that's down 1 basis point. To currencies, the Bloomberg Dollar Spot Index up 0.3%. We have the Japanese yen weaker, euro, British pound weaker. We have Bitcoin at 98,000. Over to commodities, gold rising for a 5th straight session. I'll point out spot gold at $2,689 an ounce. And we have oil, Brent crude $74 a barrel, WTI crude $70 a barrel. Companies making news, well, that's Adani Group companies. They advanced after a $27 billion rout yesterday. That followed that U.S. indictment against Gautam Adani over allegations of bribery. Shares of Adani Group, they're up about 2% in India. Now, at the same time yesterday, they were down around 22%. And Ken Griffin, well, he said he's going to be open to selling a piece of Citadel. It happened during an interview with Bloomberg. He said he would consider a partner like Sequoia Capital and also ruled out an IPO. And your interaction with Siri, well, it could be getting more conversational. Apple says it will use more advanced large language models to allow for back and forth dialogue. My conversations with Siri get kind of bad. I don't know. I yell at her all the time. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back to you guys.
At least Mateo brings some attitude.
I know. I love it.
I like that. All right, Lisa, thank you so much. We appreciate that. Jess Metton sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming the video thing on YouTube. Head over to youtube.com and search Bloomberg Podcast. What would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. We're just talking about holiday shopping. And
JT getting that hammer.
Exactly. Yeah, John Tucker.
We won't say what he's using it for because of tax purposes.
We'll put it in his stocking. We'll put a hammer in his stocking. Let's get a sense of kind of how this is all shaking out for our friends in the retail space. Duleep Rodrigo, U.S. sector lead consumer and retail for KPMG, joins us. Duleep, let's just start at kind of 30,000 foot level. How is this holiday spending season? How's it shaping up for most of the retailers out there? What are the numbers?
Well, thanks for having me. Consumers are basically telling us that they are planning to spend more this holiday season. We're expecting holiday sales to be up about 4% this year. And they're really looking forward to these Black Friday sales. The number one message I think for coming from consumers right now is value. They're really looking for some good deals.
So break down some of the top purchases here when you're thinking about different categories.
Yeah, so gift cards, apparel, gaming, and entertainment are your top three categories. So, certainly people are expecting to spend in a variety of other categories, but certainly gift cards and apparel always top the list, followed by games and electronics.
What's the promotional environment out there this season, Duleep? I mean, are retailers, how aggressive are they going to be on promotions? Am I going to get some deals this season?
Yes, so that's a great question. I will tell you, based on our survey data, consumers are more than half of our consumers are expecting deals that are even better than what they have had last year. So they're expecting to go into Black Friday, expecting more promotions, more doorbuster deals coming in. I think retailers are certainly recognizing that, and you'll see there's some Black Friday deals that are available even now. You guys were talking about electronics earlier and PlayStations. Yes, those items are already on sale right now. So the one way retailers know to attract the consumer and get the value buyer in the store is by providing deep discounts and some really good promotions.
So you were talking about some of the items that are expected to be cheaper at this point. What items are still going to be expensive?
That's a great question. I think there are some items that overall consumers know, right? When you think about value, value is not just about price. Value is there's a number of other factors when you look at the value equation. So electronics, so there's sort of factors like, in addition to pricing, quality of the product, the customer service you get from the product, the brand. So those things can elevate pricing and can maintain pricing power. So if it's a popular item, whether that's I know footwear or electronics, consumers are willing to pay a little bit more for their favorite brand. So you could expect a few items to certainly hold price when it comes to even this holiday season.
Talk to us about kind of how consumers are shopping this year. I mean, online versus, going to the bricks and mortar store. It seemed like during the pandemic that trend towards e-commerce really accelerated, and people are much more comfortable buying many different types of products and services online. Where are we today, and how's it going to look this season?
Yes, very good point, Jeff. That trend continues on. So we have not seen a slowdown in online trend. But when you step back and ask yourself why, the number one reason is convenience. Consumers are really looking out for convenience. And the fact that you can be at home and shop across multiple retail channels and have the product now getting delivered, fairly quickly next day or same day delivery, that's going to continue to drive online. But don't expect consumers to not be at brick and mortar stores also, right? For certain other product categories, whether that's home decor, apparel, personal products, where consumers want to have a touch and feel that product, see what that looks like. You should expect consumers to be at brick and mortar stores as well.
What are some of the top shopping concerns this time around?
inflation is really top of mind for consumers. So when you think about price is the number one thing that consumers are worried about. But outside of price, consumers are looking at, is the product that I want available for shopping? So is product availability is top of mind. And then if you are shopping online, is it going to arrive on time? So shipping delays are some of those things that consumers are keeping an eye out for.
Do the retailers have the products that they need on their shelves? I mean, it feels like any kind of logistic flare-ups that we had during the pandemic are pretty much over with.
That's right. I mean, overall, retailers have been preparing for this, and we feel like retailers are fairly stocked. Well, inventory levels are overall high right now based on the data that we have seen. So, for the most part, there could be one of those meme items or some popular item that might disappear off the shelves fairly quickly, but retailers are fairly ready with good levels of inventory in stock.
Dulip, thanks so much for joining us. Dulip Rodrigo, he is the U.S. sector lead, looking at the consumer and the retail space for KPMG. Do you guys, what's your split between like going to a store and going online?
I think the majority of mine tends to be online, but I would say, I don't mind, depending on what store it is, going in to just kind of, do something a little different. I feel like after COVID, when you're stuck in for so long, kind of like to go out and do things, but I'd say still most of it's probably online.
No, I like to go in store.
Yeah.
I do. I like to go I'm a touchy-feely, even with a book, I like to read a book. I don't like to go online and do stuff. So yeah, I have to do it. I feel better if I get a bargain in the store because I'm like, yes.
Right. I'll do that too. I'll check it out in store versus what it looks like online, and whatever's cheaper. I'm like, here we go.
Well, now, I mean, since talking to you guys, and particularly Alex, I'm going to have to go into a TJ Maxx store soon.
Oh, yes.
You have not been?
I don't think so.
TJ Maxx or Marshalls. I mean, they're owned by the same company.
Right.
So there you go.
So,
My husband shops at TJ Maxx.
Is that right?
Oh,
They have
I love
men's
that.
clothes.
I didn't know that.
Do you get deals, Lisa?
Yes. That is my favorite place to go for deals.
All right, I'll have to find one
You're missing
local
out.
down on the Jersey Shore, and we'll see what they got for me. So maybe I'll do a little retail shopping this weekend. S&P, we're about to open up in a few moments. Negative 3 points, Dow up 35, NASDAQ down 42. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with a new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, we've got a lot for the markets to consider this morning. We have geopolitical tension still simmering, more economic data on tap, a read on sentiment, and also S&P Global report on American manufacturing. So let's see how we head into the final day of the trading week. We'll start with the S&P 500, down, actually up just a fraction, up about 3 points at 5,952. The Dow up 0.2%, 112 points at 43,982. And finally, we get to the NASDAQ, down just a fraction at 18,970. The 2-year yield, 4.34%. That's little change. The yield on the 10-year, 4.45%. 0.41%, and that's down 1 basis point. We'll head over to commodities. We have spot gold higher, $2,686 an ounce, and we have Brent crude $74 a barrel, down just a fraction. WTI crude $70 a barrel. To currencies, the Bloomberg Dollar Spot Index up 0.3%. We have the Japanese yen, euro, British pound weaker, and Bitcoin at just over 97,000. At the open, let's check in with a few companies reported earnings after the close yesterday. We have a Gap up 13%, Ross Stores up 7%, Intuit down more than 1.5%. That is your Bloomberg opening bell report. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene this morning. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Brokers studio, and we're streaming the video live to YouTube. YouTube.com, search Bloomberg Podcast. That's where you'll find us. Boy, the picture coming fast and furious from President-elect Trump and his team. A little bit of a setback over the last 24 hours or so. Matt Gaetz, I guess, withdraws his candidacy for Attorney General. Trump picks Pam Bondi for Attorney General. So let's break some of that down while we're hearing coming out of Washington. Wendy Benjaminson, senior editor for Bloomberg News. Wendy, what do you make of kind of this news here in the last 24 hours as it relates to the AG, Matt Gaetz withdrawing his nomination, then President-elect Trump nominating Pam Bondi? What do you make?
Yeah, so, the Matt Gaetz news that we all went through yesterday was Trump and President-elect Trump and Matt Gaetz both realizing they didn't have the votes, that there were 4 to 6 senators who were simply not going to vote for him to be Attorney General, given the allegations that he still denies of sexual misconduct with 17-year-old girls. So he's out. And whether he is still a congressman is kind of up in the air because he resigned, but and said he had no intent to join the next Congress, thinking he would be Attorney General. So whether Matt Gaetz is a question for the ages now. But so hours later, Trump nominated Pam Bondi, a close ally from Florida. She was the Florida Attorney General. Now she's a lobbyist for a number of large corporations. She was on his defense team during his first impeachment for trying to get the Ukrainian government to dig into Hunter Biden and his businesses there and try to get Joe Biden with that. So that's the sort of world she comes from, though she does have 12 years of prosecutorial experience, which makes her probably more qualified than Gaetz. And she will be interested in the same aims with the Justice Department that Matt Gaetz would have had under Trump, which is to, go after the sort of deep state actors they believe are out to get Donald Trump.
I want to circle back something you were alluding to, Wendy, is that Matt Gaetz, he resigned from the 118th Congress, but he was elected to the next one as well for the 119th, even though in his statement he said that he wouldn't partake in that for next year. There's nothing necessarily holding him back, right, from potentially actually going back and maybe serving in the 119th, even though he said that. I mean, what kind of precedents do we have for something like that? And how likely would they have kind of a special election to replace him and him not returning?
Well, the text of his resignation letter says, "I have no intent to be sworn in for the 119th Congress." He is, however, duly elected, so he could show up in early January and swear in. If not, they may just, work it out behind the scenes, or if he is forbidden by the rules, in which everyone's trying to figure out what the rules are and how they can be manipulated. But if he cannot swear in January, he could run in a special election to replace himself. So, or he may just decide he's had enough. We just don't know yet.
I mean, how likely do you think he would actually try to go up for election again? And would he be reelected?
I don't really know. I think that I don't think he wants to miss a Donald Trump presidency with a Republican Senate and a Republican House. I think that's a lot of power that most people would find difficult to give up. But like I said, I'm not sure he would even have to sit for re-election. He may just be able to tear up his resignation letter and show up in January.
Wendy, how about some of the other nominations? I'm thinking some of the ones that may be a little bit questionable for some people, whether it's Tulsi Gabbard or Robert Kennedy Jr. What's the expectation of how that might play out? Will they have support within Congress? Will there be some problems potentially?
There will be some problems potentially for those nominations. Many of his nominations are sort of signs that elections have consequences, that, Trump loyalists are going to be in the cabinet, but they are in some way qualified for their job, like Tom Homan, the Borders are, or people like that, or Marco Rubio for Secretary of State. And then there are the ones you mentioned, and those are not going to have a good time in their confirmation process. Pete Hegseth, the Defense Department nominee to lead the Pentagon, not only does he have no experience running a bureaucracy of this size, of 2 million employees and a $900 billion budget, but he also has his own troubles with sexual misconduct allegations against him. He was cleared. He paid the woman some money, and she signed a non-disclosure agreement. So we don't really know what happened there, except that he denies it. But a non-disclosure agreement cannot survive a Senate subpoena, so if they want to hear from her, they can. Maybe in private, something like that. Tulsi Gabbard also, has said very sympathetic things about Vladimir Putin. She has met in Syria with Bashar al-Assad during his civil war. So I think there are a lot of questions about, what she would, how she would run 18 intelligence agencies as the office of DNI.
The Wall Street Journal has an exclusive story about how President-elect Donald Trump has floated selecting Kevin Warsh as his Treasury Secretary, with the understanding that he could later be nominated to lead the Federal Reserve when Jerome Powell's term ends in May of 2026. What are the top contenders here? How likely could it be Kevin Warsh, and could we potentially see him end up leading the Fed?
Well, I think we're getting a little ahead of ourselves on who will lead the Fed as Jerome Powell's term still has, a year or more on it?
Right, May 2026.
Excuse me. But the leading contenders, according to our reporting, are still Scott Bessent, Mark Rowan of Apollo, and Kevin Warsh. And so, they've interviewed, we're waiting to hear. Trump really seems to be taking his time on this one. Maybe because he can't decide, maybe they haven't said the right things. One of the things about the Treasury Secretary pick is that Trump very much wants to please Wall Street. He's always wanted to be of that world. He's always wanted to be accepted by that world as a New York, billionaire. So he wants to please them. And yet he also wants someone who will impose his tariffs policy and who will carry out some of his tax cuts that may not be great for the market. So finding someone who will enthusiastically do both of those things is tricky, and that may be the holdup.
Wendy, is there anything else we should be on the lookout for coming out of the Trump campaign here before we get to Inauguration Day, aside from the the various nominations?
Well, I think those confirmation fights will start in January, so we'll wait and see, what other shoes drop on that. Other than that, there's really not much Trump can do. He has been unusually quiet. I mean, we haven't heard his voice in a week, which is amazing. So he may be just kind of recovering from the campaign and waiting to see what happens next. He has not been weighing in on things like Russia using a ballistic missile in Ukraine. He has not weighed in on the International Criminal Court, putting out an arrest warrant for his close friend, Benjamin Netanyahu. It's very unusual that we're not hearing from him on policy. So I don't know whether he will perk up and start doing that again or remain quiet until inauguration, which I can't believe he will.
Can't believe, exactly. All right, Wendy, thank you so much for joining us. Wendy Benjaminson, she's the senior editor for Bloomberg News, located in Washington, D.C., with our news located in New York City.
All right, guys, Donald Trump has a new choice to lead the Justice Department. The president-elect nominating former Florida Attorney General Pam Bondi to run the DOJ. Let's get more from Bloomberg's Denise Pellegrini.
The selection of Bondi comes after Trump's first pick, Matt Gaetz, withdrew from consideration. The former Florida congressman faced scrutiny over allegations of sexual misconduct. Gaetz denied them, but he lacked enough support among Senate Republicans to be confirmed. In Bondi, the president-elect is elevating another longtime ally with Florida roots. In the first Trump administration, Bondi worked out of the White House, assisting in communications related to Trump's first impeachment trial. As Florida AG, Bondi earned national attention for her efforts to overturn the the Affordable Care Act. Denise Pellegrini, Bloomberg Radio.
Well, Matt Gaetz may be out as Attorney General and as a congressman, but he could still face pressure over his House ethics investigation. Meantime, Gaetz' campaign spending under scrutiny. Federal filings show the former congressman's campaign spent 19% of its donations to the payments processor Stripe. Campaigns typically spend 1% to 4% on payment services. Gaetz' team says not all that money went to Stripe, but the company doesn't break down which vendors received the funds. And as President-elect Trump weighs his Treasury Secretary decision, as Jess reported, the Wall Street Journal said he's discussed naming Kevin Warsh for Treasury, then moving him to the Fed when Chair Jay Powell steps down in 2026. Scott Bessent would serve as head of the National Economic Council and then serve as Treasury Secretary once Warsh takes over the Fed. All this still up in the air. Mark Rowan of Apollo Global Management also is in the Treasury mix. The U.S. confirms Russia has fired an experimental intermediate-range ballistic missile at Ukraine. President Vladimir Putin said the attack was in retaliation for Ukraine's use of American and British-made missiles earlier this week.
We consider ourselves entitled to use our weapons against military facilities of those countries that allow their weapons to be used against our facilities. And in the event of an escalation of aggressive actions, we will respond decisively.
In a televised address in Russia, Putin warned the U.S. air defense systems would be powerless to stop this new missile, which he said flies at 10 times the speed of sound. And more than 60 years after President John F. Kennedy was assassinated, conspiracy theories still swirl. President-elect Trump promised during his re-election campaign he'd declassify all of the remaining government records surrounding the assassination if he returned to office. Well, today's 61st anniversary is going to be marked with a moment of silence in Dealey Plaza, where Kennedy's motorcade was passing through when he was fatally shot. Food and drink, of course, this is the fuel that keeps negotiators negotiating. It always gets a lot of attention at the climate summits. From the New York Times, at this year's meeting, the Australian delegation is a favorite for its complimentary coffee. And then the Singapore delegation. They're giving out free beer.
Nice.
Made from recycled toilet water.
No, thank you.
Oh, wow. Never mind.
It's a hoppy Pilsner called New Brew. It comes in pastel cans decorated with solar panels, rain clouds, and cityscapes. The beer's recycling credentials, they hope, might add to its appeal among the environmentally minded at this year's COP29 summit. In our day, you know how much beer we probably drank that tasted like toilet water? But did we care?
Did we care? Did
We didn't care. I know Paul didn't care. Yeah. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Just Paul.
All right, John Tucker, thank you so much. We appreciate it. John was mentioning the JFK anniversary. I was supposed to be born November 22nd, 1963. Really? Fortunately, I was a couple of weeks later than that, because that would have been a bummer to be born on that day.
Wow.
For all involved. So.
Must have been tough for your mom, the final innings there, and having to wait a couple more weeks for her.
Yeah, I think back in the day, they weren't so good on kind of predicting
right,
that
exactly.
kind of stuff. It's like, November 22nd, give or take. So, anywho, so yeah, just S&P, we finally turning positive here on the markets. And the markets, see, I don't understand someday the futures and the cash market, it's just, it doesn't seem to be very perfect. Let's talk some Harvard football coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Well, stocks are just trying to gain some traction. Investors search for value in other sectors after this month's rally in U.S. equities. So we have S&P 500 up 0.3%, 21 points. The Dow up 0.6%, 293 points. The Nasdaq up about 0.1% or 18 points. Bank of America warning that the Nasdaq 100 approaching a level could trigger a shift away from U.S. equities and toward international stocks. We have the two-year yield 4.34%, and that's little change. The yield on the 10-year 4.41%, and that's down 1 basis point. To currencies, we have the Bloomberg Dollar Spot Index up 0.3%, with the Japanese yen, euro, British pound weaker. The rally in Bitcoin losing a little bit of steam, down 0.5%, but still at just over 97,000. Few companies making news. That's Amazon. It says it's going to invest an additional $4 billion into the OpenAI rival Anthropic. AWS will become Anthropic's primary training partner for its AI models. Amazon shares up just a fraction. And shares of Tapestry up nearly 5%. That's the owner of Coach Kate Spade. It announced an accelerated $2 billion stock buyback. And finally, can you put a price on success? Well, according to a survey from financial services company Empower, $270,000 a year is what it will take to be considered financially successful. That is your Bloomberg Business Flash. Paul and Jess.
All right, Lisa Mateo, thank you so much. We appreciate that. Jess Menton sitting in for Tom Keene here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Jess, during football season, Fridays at this time, we talk Harvard football.
Can't wait.
Harvard beat Penn last week, 31-28, thrilling game. They're now 8-1 overall, 5-1 in the Ivy. They're ranked number 17th nationally in the 1AA, having a good season, but it all comes down to this week, the game.
Right.
Harvard Yale. This year's game will be at Harvard Stadium. Kickoff is noon on ESPNU. You can also listen to the game on Bloomberg 92.9 in Boston. Pregame starts 11:45 Eastern. Andrew Orrick joins us here. He's head football coach for Harvard. Andrew, great game. Let's just recap what happened last week. At Penn, a road win, 31-28. Give us a couple seconds on kind of what you experienced last week.
Yeah, we faced a little bit of adversity. We were down 14 points a couple different times during the game, and just kept battling, and were able to focus really hard to do our job. And next thing you know, we got ourselves in a position where we sent out a first-year kicker who'd never kicked a college kick in his career, and he hit the game winner. And we're on our way, getting ready for this one Saturday.
And also, you had a few key injuries last time around. So you had the starting quarterback, Jaden Craig, went down with a first quarter injury, and then he was replaced by last year's starters. So a lot of that adversity you were talking about, and you were able to come out on top.
Yeah, the good thing is we have probably two of the best quarterbacks in the Ivy League. So when Jaden did go down, Charles was able to step up, and Charles has been playing for us all year in kind of a utility role all over the field on offense. So it wasn't like he'd been standing on the sideline all season waiting for his opportunity. He's been helping us win games every week.
Coach, talk to us about the game coming up against Yale. It's going to be at Harvard Stadium. Tell us about Yale this year.
Yeah, they're definitely the most talented team we will have seen this season. They've gotten better every single week. They have great offensive skill players. Their offensive line has gotten better and better every week, and that's showing up on the stat column with how they're running the football. Defensively, a ton of talent. They create a lot of chaos with what they do, blitzing. Trust their DBs to play man coverage. So we're going to have 11-man execution on both sides of the ball to keep ourselves in this game and give us opportunity to win.
Talk to us about the environment and what it's like with the fans when these two schools come together.
Yeah, so this is my first opportunity to experience it, but having played and coached at Princeton, there was always like a little level of jealousy because you knew this game was a little bit different than the other Ivy League matchups. Very excited to experience for the first time. I've got asked this question a lot, and it may not be as different for me because I spent the last 4 years coaching in the Big Ten, and when you go to the Big House, the Horseshoe, Beaver Stadium with 100,000 people. This won't be like too overwhelming for me, I should say. But some of these younger guys who haven't experienced it at home, it'll be a really cool experience for them.
Coach, how about your seniors here? Tell us about your senior class that have been with you for so long here.
Yeah, it's a really big group. We got the last little bit of the COVID guys who got an extra year because of the COVID season got canceled. So it's a very large group, and they are great guys. They work extremely hard. They're all contributors to what this season has been so far. And I'm just really appreciative of them because, coming in, first year head coach, following a legend, their immediate buy-in to things I wanted to do differently, ultimately led to all the younger guys just following them. Like, all right, if they're on board, then we should be on board. And it's made a really seamless transition for me.
What's been some of the biggest surprises for you in your first season there?
Just getting reacquainted to the Ivy League lifestyle and the differences between that and the Big Ten as far as, your restrictions you have with how much time you can spend with your players and make mandatory and, the challenges they have to deal with academically and trying to balance those two things. I knew that's what it was going to be. It was just still a little bit of a adjustment for me, for sure.
Coach, how about maybe look ahead a little bit? Your incoming recruiting class. Talk to us about that. This will be your first recruiting class at Harvard.
Yeah, we're not necessarily allowed to talk about anybody specific, but we are in a really, really good position. We're pretty much done. I think, it's guys who can come in and help us early on in their career. And that's been kind of the standard here. That's what Coach Murphy had done every year he was here. So, we're just trying to build on that model because it's an unbelievable place. It's a brand that's unlike any other, so it's really easy to recruit to if you're really intentional with building relationships with the recruits.
Coach, thanks so much. Really appreciate it. Coach Andrew Orrick, head football coach, Harvard University. We've been fortunate to speak to Coach every week during the Harvard football season. And
Amazing.
They've had, they're having a really, really good season. I said they're nationally ranked at number 17. They're 8-1 overall, 5-1 in the Ivy League. But for a lot of these players, and certainly for the alumni, it comes down to one game, which they affectionately call the game.
It is. And especially, we were just talking about Texas A&M, University of Texas. The game used to be the two rivals there.
Right.
But once A&M left the Big Ten a little bit over a decade ago, it kind of changed things. So it's going to be huge. It's not on Thanksgiving this year, but it's going to be that following Saturday.
All right. Well, again, Harvard-Yale, the game. It's at noon on ESPNU. It's also on Bloomberg Radio up there in Boston at Bloomberg 92.9. The game starts at 12 noon Eastern. The pregame starts at 11:45 a.m. Eastern on Bloomberg 92.9 in Boston. So our friends up there in New England, that's a big, big signal, and they'll be able to hear the Harvard-Yale game. So it's considered, Texas A&M considered a good year for you guys, right?
Yeah.
Potentially if you beat. I'm going to give you the Auburn game, so 8-2, and then
we're second
Texas.
in the SEC right now, and so we're going to play at Auburn. It's going to be tomorrow, 7:30, and then the following week, it's going to be on November 30th. That's Saturday. It'll be Texas at Texas A&M in College Station, Texas.
Wow. And how many people in that stadium? That's a big
Kyle
stadium,
Field. They've been redoing it the last couple of years. It's a massive amount.
Right,
it's going to be like thousands and thousands of people there.
All right.
I know
good
Tom
stuff
Keene's
there.
down.
Exactly.
To go.
Exactly. What are you looking at in these markets here these days? The earnings basically we're done with earnings. Now I guess we kind of get back to, the Fed. We get back to what's happening down in Washington, D.C., maybe even some geopolitics kind of still coming on the front burner a little bit.
So for those earnings estimates for the third quarter, preseason, it was just above 4%. If you look at right now, it actually is coming in. Well over 90% of companies that have reported so far. We still have some retailers and consumer packaged goods companies reporting, but it came in around 9% growth for the third quarter. So basically more than double of those expectations coming in. But we see that strategy a lot, as you know, Paul, where you kind of lower the bar and then companies are more easily able to beat those expectations. But like you said, looking ahead to that December 18th Federal Reserve decision meeting there and the indications there, as well as look at positioning, because Deutsche Bank had some data coming into the week that looked at the positioning following Election Day was the most kind of the biggest and most stretched it had been based on its data history going back to 2010. And so looking at that, looking at sentiment, looking at the technicals as well, and kind of the setup going into year end, because Deutsche Bank was throwing out some stats about usually from Election Day until the end of December, there's about a 4% rally following that. So we'll see if stocks can still have that playbook going into year end.
All right, Jess, thanks so much for sitting in for Tom Keene.
Always a pleasure.
Big CP. You did a great job. We appreciate that. S&P 500 up 18 points. The Dow with 300 points at 0.7%. The NASDAQ pretty much unchanged. Bitcoin, let's call it out one more time for Tom, because I know he's listening, down 0.8%, just above $97,000 per token. All right, we're going to have more coming up. This is Bloomberg. Good morning.